Holy Spirit, Father, is just guiding us. And we just give you praise for it right now in Jesus' name, Lord. We just thank you for everything that you do and continue to just give us that wisdom, Lord, that you have just given us, Father. And I just thank you for it right now in Jesus' name. Amen.
Amen. Thank you. Thank you. Thank you. Let's see, guys. Okay, so what time is the news? Somebody probably knows better than me.
I don't know. Forex Factory's down.
Is it really?
It is.
That's sketchy.
Get out of here. Are you serious?
Quote, engineers are working to resolve the issue and should have the website back online shortly. End quote.
Wow. They must be running on Macs.
Well, there was news at 8:30, and that was building permits or something like that.
You guys want to talk about Mac real quick? I'm talking about, I can't find my thing. Hold on. My little disclaimer, like all my notes are closed. It's weird. It never happens. Huh. Okay, so bear with me. I might have to have y'all hold on for just a second while I find what I'm looking for.
Mercury retrograde.
Don't be speaking death over me, Donna. Don't speak any turmoil, negative.
Now you know how I feel.
It happened.
That's it, you guys. Seriously.
Oh, be quiet, Derek.
I think that one's more effective because I don't know what those two words mean. Like I'll always understand the preacher, but you're like retrograde, Mercury. I'm like, oh, okay, I'm sorry. I'm so sorry.
Right? Let's see. Well, I think Apple, oh, there we go. Scalping intro slides. Ta-da. I have to be smarter than my computer. Not an easy task sometimes. Found it. Ta-da. Okay. It wasn't lost. It was me. Everything closed and I was like, where did it go? Don't laugh at me too much, guys. Sorry. Okay. So now that we're back to this, C told you I'm immune from that negativity. Speaking death over there, Donna. Okay. Let's go ahead and get started. Is anybody brand new? No one, like, never been on here, has no idea what we're doing or how we're doing it? Anybody at all? Just, if so, put it in the chat or come on out. You guys can tell we're pretty open. We try to keep it pretty good. Okay. Owner says it's my first day. I don't know if your name is Owner, but you might want to change that so I can give you the respect that you deserve. And so Miss Donna can make her job a little easier. It sure is helpful. If I can pronounce it, I try real hard. Lord knows I'm not the best at it. So, but welcome to the call, Owner. And I hope you find what you're looking for here. And I hope you find better versions of yourself, more importantly, and a better way to learn in yourself. So that's kind of my goal personally. As you guys know, I am not your educational, I am your educational person, and that's really it. So everything we do is still 100% on us. So I am not your financial advisor, your tax advisor, your accountant, legal advice of any kind. And while we are talking about trading ideas and potential investments, we even dabble in slight conversations that do with taxes or other investments. This is still educational purposes only. So you are still in charge of, have to take ownership of your own decisions. So that is the disclaimer. It is a high risk activity. And as we get closer to the election, the stimulus and everything that the important people in the, politician seats get to decide, this market is going to get more and more and more choppy. So what we think is going to happen may not. It will just do all kinds of crazy things. So if you're trading heavy right now, please be mindful of that. I'd rather you get a couple of pips or a couple of points and get out because you overprotected than be the person who, lost an entire six-figure account because you were going for the longer holds and all that other good stuff. In a market right now, we're a couple weeks away from the election. We've got COVID, we've got stimulus, we've got just life in general. Final quarter, so much going on. It's going to be crazy. So please, 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 please know that within yourself. Okay, so order of operations and trade management this is all something I've said about a bajillion times. Please take a screenshot of the next 4 slides as you see them, because you can go over this much better than I can. You can read it and it might stick a little bit better. But ultimately, we're looking for a couple of trades. The bigger moves have been made this morning, so we might end up playing around for a little while, and we don't get to decide that. So everybody who's kind of new says, well, I want to trade when I want to trade. Well, I think we all do, but sometimes we have to deal with what the market gives us, and sometimes it doesn't give it to us from 9 to 11 on Tuesday and Thursday. So That's as honest and as direct as we can be. Now, in between, we can talk about gaps. We can talk about Elliott wave theory. We can talk about a lot of things. We can drag and drop entries, and you can get tons of answers. So just know that as you're coming to these sessions, really open forum. We do try to find a couple good calls. We don't always. And I'm going to get a lot more picky with the trades that I call as time goes on, especially over these next few weeks, because the market has all of this crazy stuff going on. And then, of course, we get into December, which is the lowest volume time in theory. So just plan on that. And if you're okay with that, great, come hang out. We will grow together. And if not, I get it. You know, different strokes, different folks, no hard feelings. So looking for about 3 winning trades. It's your responsibility to decide on managers, trailing stops, lot sizes, stop losses, take profits, and everything. When we're saying that this could potentially buy or sell, it's typically done at market execution, which means you place buy or you place sell. And if it is a pending order, I will say so. Otherwise, it's just in that split second. And since we're using a smaller time frame, speed and entry is key. Prices vary from broker to broker an awful lot. And eventually they catch up to each other. But if you're using a different broker than the one that we recommend, please don't DM me in private message and say, oh my gosh, well, I was 20 pips away from where you guys were at in the same second and because I can't control that. And honestly, neither can you. So if you want to get rid of some of your headaches, please use the Hugo's Way links. It's all in the groups. Miss Donna can send it to you. And it's just a good broker for scalping. I've learned to find my place and stay there. I find that works best for me versus hopping around every 2.5 seconds when my little needs are not met, but to stay the course. So that tends to really take out a lot of guesswork and a lot of the things that I don't have to figure out. Because once you figure it out, you already know and you're comfortable. So there's that.
Let me interject for just a second. Or alternatively, instead of just going to the same broker and trying to sync up that way, learn how to read the charts, trust your tools, understand what you're looking at, interpret the call, and make your own decision on your own broker.
There you go. That's 100% ownership. I cannot possibly disagree. So, absolutely. Okay, so just so you guys know, when we buy or sell, here's the deal. We have a lot of ways to protect a trade, and you guys see us do it live. You hear us discuss it live, but ultimately, your stop loss when you're selling should be above previous structure. If you're buying, your stop loss should be below previous structure, and that might just look like the higher high or lower low. It might be the fractal level, but if you're looking to say, is this trade or this strategy valid? If I put my stop loss at or above structure, that is how, that's the bottom line across the board way to do it, at least if you're asking me, in terms of 99% of trading styles. So it's going to pop around. It's going to go up and down. It's going to have its ebb and flow. And if we get in and out every time it just, pulls back and, retest the 50 or crosses the 8 and all these other things, you're going to miss out on the analysis that you made and you trusted and it was good, and letting it play out is the hard part. So just so you guys know, across the board, that is something you should write down. Now, if you're looking to tighten up that stop loss, because we are trading indices, then you can obviously say, hey, I'm going to be the person who gets in and out because I want a really small loss if I lose, and I don't mind getting back in 7 times. Please notice I said 7 times. I didn't say 2 or 3, because sometimes it will be 7 times. Then you can choose to say, hey, if the 3 crosses and closes on the opposite side of the 50, I will get out. And I'll usually give a couple of candles just because of that retest. You can also say, if the fast MACD crosses and closes above the 0 and the neutral line changes, then okay, I will get out. So you have some ways to, what I would call a kill switch, kind of a kill trigger. I had a word, I forgot it already, but you have some ways to get out sooner. But just know, if you're going to be the person to micromanage your trade, it is a trade-off. You can't be that and be the person who decides to only take 3 entries. If you're that trader, your choice has to be, I'm willing to take 7 or 8 trades until I find the winning one. If you're going to be the trader that says, hey, I trust my analysis, I'm going to put my stop loss at or above structure, and now I don't mind if it pulls back, if it even goes a little higher than the 50, because for now, I feel like my analysis is still accurate. I'm going to let this play out. You have to decide which you will be, but you cannot be both. So just so we're on the same page on that. In general, we're going for about 10 to 15 pips on a Forex pair and about 150 on an indice. I usually go for about 300 on US 30 and anywhere from, 150 to 250 on NAS and German 30. It works exceptionally well. It works amazingly well just to get those quick pips and get out. Oftentimes it hits before it even pulls back or turns around. It hits that 10 pip or that 20 pip or that 30 pip target almost effortlessly on most of those smaller time frames when you're trading and your analysis is good. So even if the market does reverse with a smaller take profit, which is the definition of scalping, right? It's the smaller take profit, you will win more often than not. Now, again, you have to decide if you're going for a smaller profit or if you're going for the runs, but you cannot be both. So I guess that's kind of the message is today. You can be one and you can be the other, but you can't be both. So just know what you're doing. If you're going to protect the trade, you're going for that 10 to 15 pips, great, be that trader. If you're going to let that run and trying to catch these bigger waves, or I believe Kat said something like scalping or squawking or something, where like we're trying to swing on these scalp entries, you have to know the difference because it's going to be a completely different set of rules and a completely different kind of trader. So just give that some thought, mull that over in yourself, and write down the rules that would be required for entries and for management if you're going to be the person who's only going for 10 pips versus the person who's trying to catch the waves. So that's a big thing that was kind of on my heart and I wanted to discuss with you guys this weekend or this week. I thought about it this weekend. So there's that. I already said voluntarily closing out positions. And then the last two are pretty simple. So best practice is to create a manageable personal budget. So treat this like a business. It will pay you like one. I was talking with the CEO of another company and they were talking about the way I talk and the way I teach. And ultimately, what I've learned is I'm not trying to teach you guys to trade, guys. I'm trying to teach you guys to learn yourself, right? To how to teach yourself, how to become the best version of yourself so you can see the trades. Because ultimately, that's what it's going to take. I can give you the rules, we can give you the tools, but if the you factor isn't there, you're still not going to get there. So that's kind of what's biggest on my mindset. So knowing that if you treat this like a business and you say, hey, here is my business budget, I can afford to reload every few weeks, or I can afford this Trading View membership or this Super Easy membership, or I can afford the YouTube. This is what I can afford. It takes all the stress out of, did I hit six figures this week or this month? Did I do that? Obviously, it's just a really good way to be. So please consider not only creating a schedule, but also creating a budget and treating this like a business. It will pay you like one once you learn to do that. So obviously I would definitely recommend withdrawing. If you took a few $100, or in somebody's case, they think last week they grew like 4,000% or something. If you legit took $800 or $8 to, a couple $100, be the smart person who takes some of that out. And if you don't want to buy a cup of coffee, that's fine, but maybe put some into another account. So you've now paid yourself for your next investment, or pay it off a little small credit card or something, but choose to withdraw every few weeks. It's just as important as choosing to deposit, because it makes this real. It makes it not just some gambling thing where you're putting money in and not taking out. So definitely something to consider. Don't worry about holding questions because we're open. If we interrupt each other, I know that that's not great form in terms of manners, but I think that I will sacrifice that for the concept of openness, for the concept of a family and open communication. So if we interrupt you real quick and say, hey, this is going on, no hard feelings. It's just how we are, and it's totally okay. So indicators.
The Italian in you.
Oh yeah, I'm used to having 50 people in a room and they're all having different variant conversations. Yeah, no joke. Okay, so please take a screenshot of these next few slides. They're important, and I think once you see that, I'm not going to read them all out, but this is the indicators that we use. Every indicator we discuss, as long as it's a free indicator, we put it, hold on, let me mute everybody real quick. We put it in the participants, where'd they go? Okay. In the with the people group, it's in there. So no hard feelings, no fussy. I promise, go in the We the People group, click on the files tab. You'll find all kinds of goodies. Some of them are useful, some of them are informative, some of them you might not like, and that's okay. But the idea is to play in advance rather than like in the Super Easy group, we're trying to keep it super tight, not putting a bunch in there, not being super confusing everybody, because some people are just joining for this color coordinated, grayed out candles, no questions, no information. this is how I want to trade. Their brains aren't interested or fixed for more. And that is literally what they're signing up for. So we're trying to keep this whole evolving group, way more open group separate, so we can teach about all the different things and Elliott waves and harmonics, and we can discuss the weird things that even Scott likes that I don't like so much, but I mean, he's good and he's
Even Scott likes.
Even Scott likes. Well, I mean, honestly, the way you see the springs and the breakout boxes has been mind-blowing to me. So I'm not going to fib. It's a big deal, like, to learn those many things. But for some people, that would confuse them so much they quit, that they walk away. They say, oh my gosh, I thought I understood something. Now I'm definitely lost. And now I just give up.
We will never quit on Scott.
There you go. See, he's stuck with us. He is. I'm stuck with him too. Yep. Both sides. Anyways, okay. Picking on a side, there's that indicators strategy. Take a screenshot here. Okay. It tells you the rules. It probably takes like 2 minutes to explain this. And then people are complicating it to such an extensive point that they're making it rocket science. And if any of you guys have heard me talk for longer than 5 minutes or watched any of my messages, which I can't seem to send out without a typo, you know that I do not do rocket science. Okay. I definitely do not do rocket science. So just know this is not that complicated. Don't let your brain do the thing that we humans do where we overthink stuff. Okay. So there's the strategy. And last but not least, how to compound an account. This is where the rules come in. This is where the you getting over the you part of ownership really comes into play. So if you can find something, and Scott's Trade Manager is second to none. And I play with a lot of trade managers, more so than indicators. I ignore most indicators at this point in my trading career. They're cool, but I'd have to really like it to even want to download it, honestly. But trading managers are rare, and they're not nearly as good. They're not nearly as all-inclusive. So if you're looking for a way to put your rules to test in real life and actionable trades and or in visualize, there's nothing that compares. So please, please, please consider playing with that a little bit while it's still in beta testing. It's a great idea. And this is the last picture you need to take. So any questions on that? And then let's see, any chance you can show us how to activate the EA for auto trade in the ATM? Yeah, you mean like turn on auto trading?
Yes, I have everything set up. However, the little smiley face on that box is not moving, so I'm assuming that it's not communicating with the indicator.
It's not allowed to trade yet. There's one more step you probably need to make. You go into the settings for the expert. Just click on that frowny face, and up will pop a settings box. Go to the common tab, where you check DLL imports, and there's allow live trading in there.
Okay. I did click that as well. They're supposed to be moving.
And is the auto
I did a sample trade on something really small yesterday just to see will it, take me out in profit or negative, and just kind of kept running.
Well, look where Jenny's pointing right now. The auto trading, is that turned on?
Where is she pointing? 1 second.
It's okay.
Okay, I see where you're pointing. Let me check now. Let me check.
So you don't have a smiley face, correct?
No, I don't have a smiley face, and auto trading is now cut on. Okay, now I'm activated.
There you go.
We call that a feature.
In fact,
we've all done it, sir.
Well, you can use that button to get ATM out of your face if you don't want it to manage a trade.
Perfect. Appreciate that.
Or for example, so let's say I want to catch this big run and I'm pretty confident again of my analysis. I don't want it to start scaling me out, or I don't want it to, trail too tight, depending on what settings I'm using, right? I can just click that, drag and drop my profit, my trade into profit, and I can just keep moving my take profit all the way down, 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 baby, all the way down, right? And then I don't have to worry
if you are using broker stop loss and take profit.
Well, wait, you designed it, so you're right. But so this line here, I got to go to a different chart. This line we drew last week, but I'm going to move it now. So I'm just saying it's retesting it. That's kind of cool. So if you're not using a broker stop loss and this is your active trade, so let's say you're using a hidden one, you can still drag that entry and move it up, and it will give you a broker stop loss in addition.
Absolutely true. Yeah, absolutely true.
Or back into profit. So you, even if you're doing the hidden thing, but that's your choice, that's your preference, you still have an option to do that.
That will manually create a broker stop loss or take profit. Just know that if you're trading that south right now, for instance, you need, if you want to set a stop loss and prices move down away from your open, you need to move it up and let go.
Perfect. Yeah.
And then it becomes a stop loss. If you drag it down thinking I'm going to put the stop loss down here, you just set a take profit and you're out wherever you are.
Yeah. Good point. Not everyone knows that. I did that wrong quite a bit as well. So I did too. Okay, so can anybody of my news gurus and people who are more fundamentally inclined than myself confirm, are they doing the stimulus package today? What's up with the news? If Forex Factory is down, are there other investing sites that have some data for us?
Is up right now, and it's not showing anything important for the rest of the day. Well, that's not quite true. Nothing that's going to affect us. Okay. As far as doing index trading.
Yeah, same.
So wait a minute, did they decide on the stimulus package or no? Or they're just having a meeting?
Yeah.
I think somebody mentioned it was the deadline today, which means that, Congress has as long as they have.
Oh,
well, hammer that out.
Whatever, their deadlines are as fluid as.
Yeah, that's great.
I think they're arguing just to argue.
I know, right? I think that they enjoy it. Like, don't they have other things they want to do?
And, and we have people who really need that money. It may not be significant to some of us, but others, they really need it. I don't know in other places, but California, we have a lot of homeless people in the San Francisco Bay. I mean, a lot of homeless people, and that 1,200 or whatever it is can go a long way to people, but I don't know.
That's an interesting question. So you got a bunch of homeless people. Can they even get a stimulus check if they don't have an address?
Yeah, that's a darn good. You're smarter than me, Scott.
Pretty sure they can't, but let's call it the people trying not to become homeless. They need that money too.
Oh yeah, absolutely. That's true. I'm just wondering, the people that are really at the very bottom, if they don't have an address, can they even apply?
No, I don't. I think it has to do with tax somehow.
Some nonprofit organizations or like shelters allow them to use their address for like their EBT cards and stuff like that. So
the people with, shall we say, mental challenges, not just drug addicted, but the paranoid schizophrenics that are out on the street, they won't go close to a shelter.
You're right.
So just to clarify, and then we'll talk about charts, but I believe that the last stimulus was you were required to, no matter what, give it to anybody. And that means anybody. So if they could find you, you got one. Now, there were some hiccups in terms of ages and last names and social security benefits, but my understanding is homeless, mentally incompetent, everybody, provided they could find you or had a bank account to deposit it into, they deposited money in terms of every single person they could find.
Yeah,
now,
you had to sign up for it. Oh, sorry, Scott. But just to clarify, you had to still sign up for it because if you were a taxpayer and etc. and you collect Social Security, they already had you on file in terms of the everybody. But if you weren't currently filing taxes, your income was too low, you're unemployed, mental, physical disabilities, etc., you would have to go to a certain website and then sign up before you could, get your money.
And if
you're homeless, you still have to be web savvy, huh?
Yeah, unfortunately.
Oh man.
And then when the libraries closed down because of COVID.
Right. There's that too. Okay, so real quick, guys, we had this huge impulse push to the downside. So let's talk about that before we miss everything that happened. And then we can talk about all the fundamental political nonsense all day long. So I did go ahead and add something to this structure chart that we usually go to. I'm not going to go there first because I don't want it to be the highlight of everything. But real quick, let's just bounce around the charts that we do use. So we do take a look at NAS, German 30, US 30, S&P moves way slow for my taste. Eventually gets there. It just takes a long time to get there. So, well, let's take a look real quick at what we're seeing on these charts. So I'm going to pop to the 15-minute time frame to show you all three of these lines we drew last week. And you'll notice they've been respected. And I'm not saying that to toot my horn. I'm saying that to toot your horn, to, light a fire in your butt, to say, go mark up TradingView. The cool thing about TradingView is the stuff you marked up last year is still going to be present, provided you didn't clear all objects. Like, you'll get to see if the channel you drew was respected, if the take profit you anticipated was hit. You'll get to see if the structure mattered or if it had no validity. And you'll learn from that. It's a deeply beneficial learning experience. So please consider doing that. There's second to none. There's nothing I can say or anybody else can say that's going to teach you what that will teach you.
One other thing about TradingView is that you can have a free account on there, and you can do all the markups you want. You can just only have 3 indicators, but you can do all the markups you want, and that'll stay there forever.
Yep, there you go. Okay, so Elliott wave theory, now granted, don't quote me. I haven't looked at it, so I'm about to put my foot in my mouth, go figure, says that this could make another wave, okay? And we'll discuss that here in a second. And we could definitely come back up and test this structure. It doesn't mean we will. We're saying we can. That's what we're saying. It doesn't mean we will. We're looking at potential places this can go. Now, I don't know that that's going to happen.
That's only if it's an impulse wave. If it's a corrective wave, it's 2.
ABC.
So if that's a flag, it's 2. If it's an impulse wave, it's 3.
Elliott wave theory is 3, so it's 5. It's 5 points, 3 waves.
Right, but so we've got, get my tools up here.
There you go. I'll wait on Scott for a second.
1 push, 2 push. So a corrective wave would be that, with the idea that it's going down.
It's an AB formation, right?
Right.
Okay.
But an impulse wave, which is kind of moving in the direction that it's moving, would be it would be push, pull, push, pull, push. So 3 pushes.
And this goes back to that measured move theory. Okay, and I'm going to be very specific when I say theory, guys, because all this stuff is very theory based. It's saying if your second wave has to be bigger, right? So this wave is the third one.
It says that 1 is often bigger and twice the size, but not that it could be number 1 that's long. It could be number 2 that's long. Sometimes it's number 3 that's long. I'll tell you, Elliott wave is one of those things.
It's such so theory based that we could sit here and go ahead.
It's subjective.
Subjective.
When things are being painted, it's subjective. And the thing is, after the fact, you can go back and apply it, and it looks great. It's flawless. But how many little pullbacks and pushbacks do you have to ignore for the bigger move in order to understand that this was the 3 pushes?
That's the problem. You have to ignore an awful lot. So,
but the people that are good at it are really darn good at it. That's not me.
Fair enough. I'm just learning. I'm just going to be a sponge. So. But either way, so we have the potential to make this an impulse move to go to the upside. I am not going to call whether I think it should or I think it shouldn't. In fact, I've got a pending order to sell it. It's coming up in the close pips once it breaks a certain level of structure here. That's my analysis based off of the retest. So the impulse, which happened at opening bell. So that means opening New York, not opening stock market bell. That happened at 8, right? So my analysis says that we've got a little bit more room to push down before we even need to continue the continuation wave to the upside. But just to kind of see what we're seeing, 5-minute chart, we're below the 50, both 50s, and we've retested, which is beautiful. 1-minute chart, let's take a look what we see here.
And be careful, people. This is the opening candle painting right now. Don't get suckered.
Yeah, don't jump in on opening bell. That's opening stock market bell, just to clarify. So we're pushing up right now. We're kind of still below the next higher time frame 50. So that's what we're seeing is just some potential of what could happen. But I'm going to go to NAS real quick. So NAS is pushing down. Again, that's opening bell, so we need to be mindful of that. I will go over and try not to give you guys dizzy spells. We don't want to get suckered in, but we definitely have some more room to kind of go for the continuation of the downside. So this line, again, we drew last week. I'm going to clean them up probably this weekend. They're getting too many at this point, at least on MT4. It doesn't transfer the same. So I think Scott's pointing out that we broke through, retested, and we're coming up. Hopefully we stay out of this zone.
Yeah, we could still be just creating a big wick for another move up, because our initial range is where it's drawn and we're moving inside of that. We got maybe a very slight break up north up here, but we got a big break down south, and I wouldn't have been at all surprised to see that push back north. But there's enough fundamental stuff moving the market right now.
And fundamental means news, guys, just so you know. Okay. So that's what we're looking at. I'm definitely a little bit more biased to the sell, but we're only taking signals. We're only taking when our rules line up. And right now we did not retest the 0 line on the MACD. So that's not a valid entry, at least not on the 5-minute. That's kind of what we're looking at. We're trying to take rule-based entries and ignore everything else. It's not easy to do. It's possible. It's not easy. There's a difference. So real quick, I'm going to protect that because I need to be teaching right now and not trading. So German 30 kind of really comparable to what we're seeing on NAS. We're below both 50s. We did retest on this one because it was a little bit moving slower. Because it moves slower, it retests a little bit smoother. And you'll notice that as you trade different pairs and you get variant information, when it looks like it should be giving you the information, but it's different. The reason why this is giving you different information is because it moves a little slower. So the speed in which this moved is allowing this to retest, whereas like we just saw, this one and this one did not retest in the same way on the same time frame. I better do it properly. We didn't break above the 0 line. So that's kind of what we're seeing. We're pushing up now. We'll have to wait till this opening bell stops. S&P, I've only traded this the one time I took a trade with y'all. The analysis was dead on. The movement was not fun. I don't love the way this one moves, but you have to decide if you might like it, and that's okay. It's totally okay if you do. So not a bad trade. It's huge impulse to the downside. At this point, we're pushing all the way back up to both 50s. So kind of be super mindful of that. That's the next higher time frame. Like, I don't see why we should be getting an arrow here. It's probably just ghost painting. There we go. Sometimes if you see some stuff you shouldn't see, click on a different time frame and then click back. You'll get a much clearer view. So because this should be reasonably smooth depending on your settings. So that's what we're seeing here. And we'll go to the actual markup of the charts here in just a second. GBPUSD, I'm really hoping for the push for the break of the 50, which we're not getting. We've got this nice kind of double bottom on the 5-minute. I was looking to get in, but I missed this one. I was busy with the indices. So now we have to kind of decide. This is definitely forming a formation, but on a smaller time frame, the formations don't have nearly as much value as they do like on a higher time frame. So just take that with a grain of salt. And then of course we've got gold. So gold on the daily time frame looks like it has some room to push down. However, with all the fundamentals going on, we have to be super mindful that this can there's a lot of room, especially if you're not looking at the day chart, for this to give you plenty of entries and plenty of waves, if you will. So know that with, everything in you and trade it accordingly. But we can get the smaller time frame buys. I am definitely more biased for it to break and give us some more sells based off of the daily time frame. So otherwise, I haven't been playing with too many of the Forex pairs except for on the daily time frame or GBP USD on this exact strategy. So I went a little backwards this morning instead of starting with the structure chart because there's a gentleman in the group. He's awesome. He's constantly paying it forward and he's constantly participating. So he's been playing with Elliott wave theory, that and quarters theory and some other things. I don't subscribe to most of those trains of thought as a end all be all. I don't follow any of them as a, hey, this is that, and there's nothing else that matters, and it's only this. I look at it at a much more, 10,000 foot view of, hey, this is a possibility, not a guarantee. So that's how I trade. So hopefully you walk away from this with your own interpretation of the information. But last thing I'm going to say before I show you that is that I've got several indicators that show you Elliott wave theory. Some of them have lines, some of them have dots. The best one I have is part of a paid for membership group. I think it's $2,000 or $3,000 buy-in right now, but it's locked, so I can't share it. This is the second best. It's free, and I will post it if you guys want it. So unfortunately, I'm going to have to delete all the fancy lines we've drawn. I left them up because I want you guys to see how often your analysis is respected, how often our analysis, it matters, but in the split second, in the minute to minute, we ignore it because it's too much for us to handle. In minute to minute, we're watching the chart, it's doing this, we're freaking out, we don't know what to think. We're not clear-headed, but mostly it's pretty dead on when we break through, when we retest, when we reject off of trend lines, when we decide a target area, it's reasonably accurate. Most of us don't allow it to run to that point though. So this was the line we drew last week. It went perfectly, but of course it's not playing out that way if you guys don't hold it that way. So just something to kind of consider. Notice the last thing I'm going to tell you about it is it definitely repaints. It has to repaint because the nature of Elliott wave theory is this is going to keep moving until it stops moving. So your threes, which is your third and final waves, are going to, they're going to repaint. They have to repaint because it's going to keep scooching until it stops scooching. So you'll notice right now it's scooching. But if you guys can see, you have your major wave, small wave, small wave, small wave, and then there. So it's showing you all of the small waves inside of the big waves. And if you go to higher time frames, you're going to get comparable kind of information. So let's see. Bigger time frame, that's your big wave, the end of a wave, which I can promise you was here. Not a huge, inaccuracy. Okay, but it does and will repaint, just so we're all on the same page. It'll keep scooting until it stops scooting. So we don't look at the current one. And you get all these little baby waves, so you would know when to re-enter for a sell, okay, to continue on this trend and to hold it until you get your next one. So I don't know if this is something that Robert's using or not, or something comparable, but if you guys want this indicator, you can have it. All it is these dots. It's potentially valuable like anything else. It all has potential. How much practical potential it has, I don't know. No idea, but it has potential. So everybody see that okay? I have to delete all these objects now though. Control A. You'll also notice that blue trend line we drew 2 weeks ago has been respected perfectly, because that's kind of awesome. I had to point that out. Does anybody like that, hate that, love that? Anything at all?
I know I don't have an
I'd like to
opinion
see
yet.
it.
Scott has no opinion.
I'm curious about that.
Okay.
I just love how you give us advice not to jump in when the market opens, because gold was nasty.
Gold is nasty. On the daily time frame?
I'm just looking at the 5 minute. It looked like it was going up at first, and then the next candle came and just went down the hill.
Hey, Jenny or Scott,
Yes, sir.
someone in the chat is having issues with finding NAS 100. I don't know if they have Hugo's Way. I think his name is Bruce.
Try, what is it called, guys? Is it US Tech? Is that what it's called? I think that's what it's called if you're using the IC markets or whatever it is.
Bruce, if you have a U.S. broker, it will not be there.
What broker are you using?
Forex.com.
They don't have it, I don't think.
Yep, they won't have it.
Okay, I'll get Hugo's Way today.
All right, awesome. Well, welcome. Ask Miss Donna for the link, please. Or Miss Donna, if you'll send it to him or put it in the chat, pretty please.
Pin post, I believe.
It should be there. Yep, it's always there. Everything is really in the group, guys. So, but this is where we're at. That's what it is. I don't love it. I don't love it for many reasons, not just the repaint, believe it or not. It is kind of nice to see the waves in action, but I don't love it for other reasons. But to give you guys an idea of what that looks like and to help you see the waves, kind of like with this structure, it is not my favorite, but if it helps you see it, then it has an advantage. I'm not saying you should take signals based off of it or trade based off of it. I'm saying if it helps you see the waves, it may be beneficial for you. So
I like it. Not the actual PET, but I do like you talking about it, because like a month ago, I was researching PET and trying to understand it. And it's always tricky when you're learning from a different source and they aren't necessarily applying it to the same thing you're doing. So you're trying to take that information and then combine it yourself. So it's good to see it this way.
Well, thank you for that feedback. I super appreciate it. So I'll put that in the group right now. I'm going to take it off the charts, but it just, again, helps you see kind of what it's doing. So in theory, like everything else, if this is the final wave, we've got some potential to push. But as you study this, you'll realize that it doesn't mean it's a forever push, right? It just means it's a current push. So treat that like what it's meant to be, because that is what it's meant to be. You also have the option to take off the smaller ones, the smaller waves, the 1-2s, and only keep the 3s. This one is labeled different than the other one that I would use, but that one's coded, so I can't share that one. So it does the exact same thing in the almost exact same way. So
it looks as though the 3s aren't exactly the third push or the third wave. They are just sort of strength, sort of looking at what the time frame is. I don't know. Everything was a 3 in the large movements.
Those are it's the final part. So it's either the beginning of the corrective wave or the end. So it's the beginning or end of a corrective wave or an impulse wave. Everything you see.
Ones.
Oh, the 2s and 1s are all the babies.
Yeah, well, they would be smaller inside. That's because Elliott wave is all fractal, which means you'll see movements on the 1-minute chart that are inconsequential on the 4-hour chart. But you can see the waves in all of them, but there are different magnitudes. So it's interesting that it doesn't, from my read of it, it doesn't quite look like it's fully Elliott wave.
Gotcha. Yeah, I don't know enough to even be dead on Elliott wave. To be honest, I studied it very briefly. I read the book and read the PDF and listened to a couple of audios. And then there was a whole book about it too that I read. So I understand it, like in a bird's eye view, I understand it kind of mentality, but that's it. Like that's the beginning and end of my knowledge on it. So if this is a move on this 15-minute time frame, there could be multiple Elliott waves in here, right?
Yep.
So that's what that indicator will do. So this will give you the big 3 and the big 3 here, but inside of this, you'll get lots of other big 3s because there's many of them if you were on the 1-minute time frame, for example. So that's what it should do. You won't just have the same 3s. You'll have lots of more 3s if you're on a smaller time frame. So
And notice how we're still fighting that level.
We're still kind of hanging out in that zone. So let's do what we typically do. Now that we went backwards instead of forwards, let's take a look at the pairs that we want to trade based off of structure, which is the most important thing we can do, right? So I noticed that Aisha in the group, she's constantly checking higher time frames, which I have the utmost respect for. And she's constantly looking at more than one. To me, that's brain numbing because it's too much. And then I tend to get myself tripped up. But if she's got the ability or you have the ability to do that, I cannot recommend it more because it's awesome. It's a great way to be if your brain can not get tripped up. So huge impulse to the downside in comparison, but we do want to take a look. The election is coming up. So this was before COVID, right? So today's October 20th. We're only a handful of weeks away from the election. We failed to kind of touch that high. We definitely have some wicks, and I don't know much, and I'm not going to sit here and talk fundamentals inaccurately and ignorantly without having the knowledge that I would need. But there's a lot of anticipation that says no matter who is elected, we're expecting a drop. Do I know that's the case? I don't know. I can't verify and I can't promise and I can't swear to any of that. So just know that that's a theory, particularly if one party gets elected over another. And I don't want to get into all that blue and red topic, but just so you guys are super aware of what we're looking at. Now, again, if we do happen to push up until between now and then, oh, don't be silly, the election, we could push up and then it makes its decision from there. So just look at that kind of with the both kind of possibilities in mind and you will do super well. Also notice that we're kind of sitting at daily structure. So this is that fractal on a daily time frame and we're rejecting off of that. So that's, this is an area of interest, this whole area. And don't think of it as a line. Try to think of it as more of a box. I don't draw too often on this platform, but you're looking more at the box. So in between either of these, not some dead line of a dead set point and number, but just to know that we're rejecting off of that. And that is an area of interest. So currently that's what we're seeing, is we're rejecting off of that area. So that's what we're seeing on the daily time.
Right around here.
Huh? With all those candles have stopped, yeah. So I stick closer to the fractals, kind of, because if I had this on a line chart, it would definitely be closer to in here, because that's where it stops on the line chart. It peaks there and it stops there. But for now, like, I want it to break that before I would really consider any long-term moves on the line chart. But just to give you an idea of where those two fractals are, fair enough. Fractals don't touch price though. Okay, so daily, an hour time frame, we're rejecting off of, again, that area. We do that line on the higher time frame just to give you guys an idea. Huge wicks to the downside. We have been gapping. We keep gapping, and that has probably a lot to do with the political state. And remember, we don't trade gaps. You still want to wait for a confirmation from your strategy before you trade a gap. No matter what, don't just jump in all willy-nilly because you feel like, oh, it has to close. Some of us have lost an entire house on trades like that. And I do mean the entire $300,000 level house based off of a gap.
Let's talk about that gap yesterday. I think there's some misunderstanding of what this was. So if you go to a 1 minute chart and scroll back to the beginning of yesterday.
Well, here's a gap. Can we use this one?
Well, we can, but to understand this, you need to look down to the 1 minute chart.
Okay.
And then bring us back. Yeah.
Let's find that gap, guys. I don't know if that gap was present on oh, this is Hugo's way.
It was not present on AFX, and I believe it wasn't even present on the
Trading View.
No, it wasn't present on Hugo's Way Live.
Okay.
Now, put your crosshair cursor on and look at the time of the candle at the bottom of the gap. So that's 23:14. What happens at 23:14? Server shuts down. Then come back to the next go up to the next candle. That's 23:33. Server turns back on. Price moved while the server was down.
You guys all see that?
I think there was another one before that.
Yep.
Can't remember exactly.
There is, and the Hugo's Way demo server shut down for 3 minutes. That was not planned. The live server didn't do it, but the demo server did.
So what is it you're saying? Are you saying that if it price moved while the server was down, that doesn't count as a gap? Is that what you're saying?
Right. Yeah. But what it is that the server wasn't plotting prices during that period of time. It had no price changes during that period of time. So when it reconnects to the feed, then there's a gap. The gaps that'll matter in the Forex market are either in extremely volatile situations where price suddenly jumps, and then you'll see a gap on some servers and not on others. It depends on whether a trade transaction happened during that price move.
What about on Sunday market open? Do you think that
is
matters?
a gap? That is a true gap.
What about at session crossover?
You can have some gap there as well. That's because the servers are down during that period of time, and a price may be moving in other markets, because I don't think that all brokers do their crossovers at the same time. There are some that are GMT based. It varies.
Gotcha. Okay, so that's information.
Go down to 1 minute and look at the times, and if you see a big time deviation, you can understand what happened there, and that's not necessarily a gap that needs to be closed if the market was actually trading during that period of time.
Okay, so here's what I'm going to do. So that's valuable information, and again, we don't mind variant views, we want, whoever's unmuted, please mute yourself real quick. Okay, so variant views are totally okay. So what, I don't know about all that stuff. I do know the server being down is a cause. I do know that conflict in price is a cause. I do know that if they're not present on trading view, particularly, and trading view tends to fill them. So trading view, if it shows up at open, sometimes it will close the gaps. Like, for example, when I look right now, it looks open, but if I come back on this candle, it will look like it was closed. So trading view does have a tendency to do that, to back paint candles.
Connect to on TradingView.
I'm sorry, what?
Which price feed do you connect to on TradingView? Is it
I like Owanda. Yep.
Okay, Owanda is the most liquid brokerage. You know, so the most trades, you are less likely to have a gap with Owanda, even if that's your brokerage. It doesn't matter with TradingView. If you were to connect your TradingView feed to a different broker, you will see different pricing and different gaps.
Okay, got it. So just so you know, here's my perspective for everybody who's curious in terms of gaps. I'm going to get to a box instead of a line. Well, I will do a line too. But when I see it present and I see it on TradingView, right? Also, so remember, I just said that sometimes if it's present now, it will not be present on 10, 20 candles later. This will fill. I don't know why they do it, and only some do it, but they do it. So what else I know is that in theory, they have to close. So price has to come back down. Now, this doesn't necessarily even need to exist. It doesn't actually have to even be real. It could just be on your platform, on your server, on your chart, based off of so many other variables that it's insane. So I need to put that on the table. But other than all those variables, in theory, it has to fill. So when we say fill, most people think it has to come down to the exact spot that it closed. It doesn't. So I learned this from actually Sean. Dr. Spiller made six figures scalping years and years ago. And I was on his team for quite a while. So we got together on Sundays and we all did super well. You know, we would all look for, checking different pairs. And sometimes those are the only trades we would take that week were the trades that gapped. Now, it doesn't mean they have to fill immediately. It could be all week long. So just to kind of teach you guys what I do know about gaps. Now, having said all of that, I want you to notice that my target to close this gap is not going to be down here at the open or close of this candle. It's going to be at previous structure. So I'm going to change this line color just so we have something to go off of. Something else. Let's make this red. Nah, oh, fine. Gray is fine. Oh, there you go. So this is what my target is going to be once I get the indication and start selling. This is where the price itself, and I'll make another red line, kind of is here. The candle closed there. So it doesn't always touch this. That's the first thing that I've learned about gaps is sometimes it's only going to come touch this. So now if we go back into time, go 15 minutes, you'll notice that these gaps get filled. Now, it's not all the time. And again, it has to be present on more than one broker. There's so many other variables. And it's one of those theory-based things. So like Scott said, it's based off of the servers being closed and price moving while the server was closed. So they simply don't paint a candle here because they have their own legalities and reasons and whys.
Well, and MT4 just takes a look at historical price or trade closes. Every time there's a reprice, it just has that data, and MT4 just draws the data that it has. So if there's no data, you get a gap.
There you go. So that's kind of how I would trade this. So again, here's where people get wrong. They see a gap, and this is what I did too, especially early on. And I did exponentially well with gaps. I made a fortune with gaps. I also lost a fortune with gaps. So just so we're on the same page. And I do mean a fortune because I was very stubborn and very foolish and very wrong. So they see this candle and they're like, okay, cool, it has to turn around. Cool, it has to turn around. Cool, it has to turn around. They get to this candle and they're like, oh my gosh, it's starting to turn around. So they jump in. You have no signal and no reason to jump in. You still need to not be timing tops, not be guessing and thinking that it has to go the way you want it to go to fill this gap. You want to wait until you have a confirmation. So confirmation might be the MACD, going on the other side of the zero. It might be retesting of the 50. It might be 3 and 9 cross even. This one doesn't come all the way down to the gap, but you still want to take, a rule-based trade. You don't want to just jump in based off of trying to time a top to close a gap. So that's kind of the biggest message, that if I was going to give you a couple of tips on how to trade gaps, that's it. Now, in theory, it has to close. In theory, the market will come and correct itself. It does not happen. Supposedly, it's all the time. And in my experience, it's very close to all the time. It's very close.
Now, blow your mind.
I'm sorry?
If you look at areas of price action like this one, where we have one-sided movement that shoves down, shoves down, shoves down before there is any kind of retracement that pulls back, that is also a liquidity gap. That means that the sellers were just rolling over the buyers at that point, and there wasn't much buying happening during this period of time. And price will often close that kind of gap like this and in here. And if you pull it back to the left a little bit, you've got this move here that was very one-sided, and price moves up, tests that gap, and then moves away.
You're calling that a gap, where the candles are?
It's a liquidity gap, because the price movement was very one-sided. There's very little in the way of bottom side wicks. There is very little in the top side wicks. It's very one-sided price action.
Yeah, when you have an impulse move like that,
it's not a gap as you would see it in the candles, but it's a liquidity gap where there weren't a lot of buyers at work in there.
No, when we have an impulse move, we usually come back up and retest a previous low. I mean,
yep, or up at the top of, that's a bad color. Let's see here, go to yellow.
I see it.
So you get into the top area here, and that's based on the last couple of candles moving up over here, and price comes up into that area before it moves away fast.
To the last buying candles.
Yeah. So the move to the opposite side of the impulse move down. So we get this impulse move down, and we had, this candle coming across here. So we just take that candle, it's almost to the candle.
There's a guy, he sells a $10,000 strategy based off of a move like this. No kidding. It's crazy. If I told you, I'll have to tell you some of the rules, and you'll be like, oh my gosh.
Well, the way to look at
nothing.
Well, the way to look at this is that if price moves away that quickly, if you get this fast price move, there are people that wanted to sell that didn't get in at the price that they wanted. They wanted to get in up here. So they need to bring price back up into that area in order to fill the rest of their orders and here. And then they can move in the direction that they want to go. So when you see price leave that quickly an area, up or down, there are buyers or sellers who got left behind that want to get into the market.
Okay. Well, here, I don't want to miss these moves that are getting ready to start popping off in terms of US 30. I'm not going to call a signal on that. NAS is looking like, okay, we might be setting up for the buy. So on a single time frame entry, we want the fast MACD above the 0. And we want the 3 or the 8 to kind of close above the 50. So we're getting really close. We might come back down and retest a little bit. German 30, on the other hand, has already kind of confirmed single time frame at least. Now we're retesting a little bit to see if we're going to get that entry. So when we're starting to look for a buy, how you would do that so you don't get stuck in this pullback is you would pop down to a smaller time frame. You've got these wicks kind of happening. So you'd go down to the 1 minute and you'd simply wait for a signal on the buy. That's all you would be doing. So kind of knowing what's happening on this slightly higher time frame, that's kind of how you'd be seeing this. So you don't get stuck there. But keep in mind, we're going into a zone. So let's take a look at the zone on this. If it will let me, maybe we'll get these buys. US 30 bought hard, so.
No, I wasn't going to say nothing. I just shaking my head.
US 30 bought pretty good. How many? That's 1,000 pips, huh? Yeah, that's 1,000 pips. I know it's 1,000 pips. I'm pretty sure of that. I mean, I could be wrong, but I'm pretty sure. Let's see.
You're right. It's over.
It is.
Did you take it, Derek?
No, I just saw it just before you spoke, and I just shook my head. I said, it's like, even though it's past the fractal, I'm like, I hate entering late.
Well, wait, on the 15-minute time frame, are you late?
Oh, during this class, I tend to turn down to the 5. Yeah.
On the 15-minute time frame, I don't think you're late yet because I've got my alert set up on the 15. So German 30 guys, we're setting up right now. Let's take a look at kind of what's happening on the structure kind of based. You've got this beautiful double bottom. You definitely have some, this zone that you're going to get stuck in. If we draw a box, it's this kind of ugly zone that we're in, but it doesn't mean that there's not room to kind of play around in that zone. So let's let it pull back just a bit and see if we can't take that for a buy for our 300 pips. That's what I'm looking for on that. And now just for Derek, I want to take a look at US 30. 1,000 pips on the 1 minute from where I would have entered on the 1 minute. But let's see, 1,000 pips. I like the 1 minute though for US 30 because it's easy and it's seamless. So
yeah, I agree.
It's crazy. Kind of same thing, but this one looks more like that wedge formation. This one does not look like a beautiful double bottom. So we have to kind of trade that mindfully. We're coming into this zone right here. I'm not going to draw a box because one is drawn for us already. So letting it kind of retest and then waiting for another buy on the 1 minute is how I would kind of play this one out to kind of catch my move here is what I'm looking for. So it doesn't mean that we will definitely get it. It just means that we have a high likelihood of being able to, mindful of all the massive amounts of fundamentals, right, that we have going on. So we've got a full body candle. We're stopping at this previous high. I guess I will draw a line. We're stopping there. Go figure. Now I got to make it a different color than red because red is object properties. That's not going to work. Let me try this again. Horizontal line properties, and I'll make it a different color than red. Okay, I'll take any of those, just not red. Hold on. I'll do blue. Got it. Kind of see it a little bit more clearly, at least in that red box. So we're bouncing off down right now. We'll kind of have to wait and see. 1 minute time frame, I would take any signal that got me in. On this pair, getting 300 pips is very, very, very easy. But you need a few $100 in your account or you cannot trade this pair. Period. End of story. No way around it. So just know that with everything in you. We already took a look at NAS. Let's take a look at GBPUSD. Mindful of the fact that we have all this political stuff going on. We were waiting for that buy and it happened beautifully, stinking beautifully. Had the double bottom. So I don't know if anybody caught that. We were waiting for that kind of to play out and it did. So it played out really perfectly. Now we have to go to a slightly higher time frame to see, are we going to break this trend line? First off, are we going to kind of retest this big engulfing candle to get the continuation of the upside, which is kind of the overall consensus in terms of GBP. GBP is very strong right now. From what last I checked anyways, at least it was yesterday. So GBP is very strong. And that's just something to be careful of in terms of knowing the currency strengths of the pairs you're trading. So know that if GBP is strong, it can play around like this, but your overall bet should be on the buys. And that's just a way of looking at it. So same kind of thing. You're looking to go down to a small time frame, looking for it to retest or give you kind of a better push to the upside. And then S&P, which I don't super love, but that's S&P. Let's go over here. Anybody take any trades on S&P lately other than the one that we took? Is anybody trading this pair heavily or no? Just not much at all. I'm not trading.
I've taken a few.
You like it?
It definitely does take some getting used to. It's a cross between appreciating some of the slow and being bored by some of the slow. So
It's honest. It's as honest as you can be, huh?
yeah, it's like, okay, this is a beautiful setup and I'm in, and then it's like, and I'm waiting and I'm waiting. Okay.
Now
Well,
what?
here's the thing. Jenny, can you zoom out a bit? Go out a couple of clicks. That's fine. Now, pull US 30 onto the screen. See how similar it is? Go back to SPX.
It's so
The
similar.
shape of everything
Yeah.
is very similar. If you trade large enough, it's the same thing.
Yeah, I think I just need to get used to the momentum, which is a silly thing to say because with NAS and etc., it was like, okay, getting used to going so fast. And now with this one, it's like, okay, getting
Well,
used to getting in, but not getting your reward right away.
but you don't go for 300 pips. You go for a fraction of that 300 pips.
You go for like
True.
100 pips. I mean, I don't know if I were to set this up on the 15-minute time frame. Well, that's the 30. So here, let's take a look. I would get an entry here. I'll draw lines. I would get an entry somewhere here. And this is not exact. I'm not zooming in to get it exact. So let's just be fair. I don't think I would get one here at all because the 8 doesn't cross. The 8 crosses here. Let's be accurate and not be wrong. The 8 does cross. It crosses and then crosses right back. So you, hey, silly butt. I guess I'll drop that here. Oh, there we go.
Well,
So you would get
on this minute, you definitely get one right in there. Trying to hit a moving target.
It's not letting me go over anymore. It's probably the amount of history I'm sharing.
On 15 minutes, you should have more than that.
I think so. I would think so. So you would get 2 here. But the good news is you get out reasonably quickly. Hello, buddy. There we go. Come on. Come on. Those are the entries I would get. Now, keep in mind, if I got it in London, I missed it, but I also know that I'm only looking for sells. So if I get one of these alerts in London, I'm not awake. I'm not going to fib and say that I'm waking up for that. There's no way waking up. It's not happening.
So your 1 ATR target on at that time that you were just pointing out is about 60 pips. A 3 ATR target is about 143 pips. And if you're on NAS, those numbers are much bigger.
True.
So on NAS, the 1 ATR target is 250 pips instead of 60. And 650 pips instead of whatever I said it was. 100 something. The thing is that if you look at the differences in those sizes, you just multiply the size of the trade that you're taking, and in the same number of candles, you're going to make the same number of dollars.
So, looky, guys. So 563 on S&P, and 30 moves a little bit less. So I'll have to remove the objects now. Objects, Control A, delete. Close that. There we go. This one hasn't made the same level of an impulse move up. So I think our safest bet for looking for a trade is still this one. We just haven't had the same impulse to kind of go up and kick butt. But this one is look how much bigger that is. And this moves slower than NAS and slower than US 30. That's a huge difference. That's literally 500%. That's 500% of a difference. It's crazy. Okay, well, that's something. So, all right, guys, I'm waiting for an entry on German 30, and we can kind of talk and hang out a little bit until we get it. Let's see. I'll have to maybe go to a smaller time frame. We're just not there yet. It hasn't made the same impulse move up to the upside yet. We're looking for that kind of, push. How much room do we have? I don't know. So from where price is currently at to the next level of structure is our 300-ish pips. So there's that. We have the room. We just have to wait for the entry. That's all. That's what I'm doing, is waiting for an entry on this. NAS has the double bottom on the 15-minute time frame. So it's here too. So we have some room to push up. How much? I don't know. Let's go to the line chart and take a look. Anywhere even in this zone. If we come retest that zone, if you will, that's enough room to kind of get a little bit more of that buy, 400-ish pips. If we're going off of, anybody see anything variant at all? And US 30 went perfectly. Beautifully. Didn't take it. There we go. So this is what we're doing. We're hanging out waiting for our German 30 move, if it gives it to us, German 30 or NAS. So NAS has got some room too, but just a little bit different. If you guys don't mind the pullback, you guys can take your entry on NAS, but it might pull back. So from where it has to break, you have 300-ish pips. And then from where the target would be, sorry, I'm giving you guys vertigo. You have about 1,000 pips. So you have room. We definitely have some room. German 30, I'll take an entry provided we break right here. I'll draw a line. Since we're not getting the actual arrow just yet, we might get it, but just not yet. We're probably going to get it here shortly. That's what I'm waiting on. Is that whole retest of the fast MACD. We need to come back above the 0 line. We might not get it, but we'll see. So we might not get it. We will see. Bruce asked, what is everything you should get? So start with where you are before we super over, confuse you. I believe Kat has a referral link for TradingView. So please use that link if you do sign up for an account with them, because it's not very much, guys. Affiliate marketing in this industry is not ever big dollars, but it's helpful, and she has helped in the group. So I just like to try to, have that perfect balance. So please use her link if you're going to sign up for a TradingView account.
It would be for a paid account, but
well, no, because even if you sign up for a free account and then one day upgrade, then you'll still be.
Okay, good point.
And the same thing with Hugo's Way, guys. Even if you're just playing with demos, sign up using the link, and then one day, if you ever, do a live account with them. And again, it's not much. I think I like Hugo's Way best because I like how they give me so much information. It's really cool to be part of that, but it's just nice. It's nice to work together, and especially if the money's not coming from anybody else. You're not giving her any money, and she gets a little bit just for being her. So that's awesome. And if anybody else has something that they truly want to offer, then, and you guys participate and you help out, I will definitely promote that. As long as it's not in conflict with Super Easy, then you have my blessing and all of my support. So,
Jenny.
Yes, sir.
The arrow popped up on German 30. We're still waiting on it to break that structure, though, on the 1 minute.
So the arrow popped up on the 1 minute. Let's draw the line. Okay. So this is where you're going to have your level of discipline. So can you get in now? Yeah, you can, but we might reject off of here because see how much rejection we already have.
Okay.
I'm not going to say it's the worst decision. It's just maybe not the best. So in this case, we're not sacrificing a whole bunch of pips by waiting a handful of seconds. This isn't like I'm sacrificing the majority of the move. This is like I'm sacrificing a very small portion of the move. Mm-hmm. So like we talked about at the beginning of class, knowing what kind of trader you want to be, if you're going to be the guy who's going for 10 pips or 100 pips on an indice, getting in now, knowing you're going to protect it after a couple of pips because you're only going for 10, not a bad way to be. But if you're trying to be the one who catches the most, fluid moves that are going to, swing and swing in your favor, you want it to either be confirmed or you want a better retest. This one hasn't given us the better retest yet to where I'm going to say, hey, I'll get it in off of candle formations. So as you can see, I can't make it any bigger than that, go figure. But it's not like we came back down, retested the 50 and we get these beautiful wicks off of the 50s and I'm going to take it based off of where it's going. We got the arrow, but we still have all this structure and all these wicks. I don't love it. Whereas
and you've got a bunch of spaghetti on the moving averages too. You're starting to get all into one area here.
They're all kind of coming into one zone. So doesn't mean you're always going to be wrong and we're waiting is always right. That's where I want you guys to kind of learn. So like right here, we get this buy, right? And this is single time frame. Okay. We get this buy. When I see this happening, these candles rejecting off of the 50s, I would take that based off of the retest. And I don't even have an arrow. But this is just kind of, we got the arrow, but we don't have some massive retest. We don't have any cool rejection, no amazing wicks, you know, and no, you know, buyer's candle kind of really showing us some volume like we
And
do
to be
right
clear,
here.
she's talking about price coming down to the 50 to
Yep.
move away from the 50.
Right.
We're
Now,
sitting.
you want it to close on the other side of that structure before you enter, or just cross?
Well, the thing to remember is that when you have, let's say this is a bullish candle going up and it closes.
Right.
That close is kind of an arbitrary division of time. You have to see what happens with the next candle because it could just go down from there. And this whole thing is a wick on a higher time frame.
All right. Okay.
So you're looking for confirmation that it's a continued move.
Okay.
And that can even still be a bullish candle. And then you end up with a wick that pushes up only to keep moving down.
Right.
And that sounds confusing. So I know, like, especially between Scott and I, we go over this super, oh my gosh, confusing level information. I know that by all the messages, but look, so you're right. We can get a full body candle and then another full body candle, which equals a wick on another time frame. However, we have some other things in our favor. So like right now, for example, if we're really watching the ADX, we're in seller's territory again. We're not buying. If we're even watching the MACD, sure, we've got an arrow, but notice how our fast MACD is not above the 50. It's not above the 0. So right now,
this here where we were in bullish territory, we did have the bulls in control down there. It's below the 20. It's very low bull strength.
So when it's this close to structure, that's why we're looking at a little bit more of the bigger picture, because this is technically a re-entry. That's what we're going for. So we could pull back a little bit more before we get our re-entry. And this is that waiting game. And it's not fun and it's not exciting, but when you learn to do it, this has too much structure. So if it was here, again, we got this fast MACD retest, which we retested the 50. This I can trust. We've got this rejection. We've got a wick. We've got a full body candle, and another bearish candle. But by the time I get to that candle, this candle right here, I'm in. Like, I'm very confident. I wouldn't even wait for this candle to close because I'm confident of the candle formations, the fast MACD, the volume, right? The amount of power that the buyers do have. Although this, you know, the momentum is coming up, the buyers have a lot of power. Momentum is coming up, but the buyers have a lot of power. So for this, yeah, I'm good. And I would have got my 20-ish pips. I don't know how many exactly.
Now, when you point to the MACD, when you say you're in, where are you at on the fast MACD? Can you point the arrow to it?
Okay, so let's do on the fast MACD.
Yes. And you say you're in. You're all in once you see that.
We have to remember that first off, we're talking about this broke the 50. We retested the 50.
Right. I get that.
So now we have a little bit of room between the next higher time frame 50, but we have this kind of, we know what's been happening. So we have to put this in perspective. So here, let's zoom out. We know we have this huge move to the downside. So by the time we get here, I'm pretty confident of where my next targets are. So by the time we get in this area, I know that I can look for and trust a few buys, right? So now let's go here. Now I'm going to zoom back in and show you. So I take this and I'm pretty confident I'll get my 20, 30 counter trend kind of pips. I take this, I'm pretty sure I'll get my 20 or 30. And this one's a little bit of a slower mover compared to NAS and US 30. So I'm only going for like 20 on this one. Okay. 15, 20, you know, or 150, 200-ish pips. So by the time we get here, so this candle is a wick candle. It's a kind of a doji, right? This candle is rejection. So I'll use my crosshairs now that we know we're looking for a couple of buys just to buy out this spot. Well, I don't have, the buyers are not in control. I get this nice kind of bodied but bullish candle, right? That has officially broke that. This next one is a little iffy. It's kind of wicky, and I'll try to zoom in to make it a little bit more clear. It's a hammer, right? It's not super appealing. Don't love that candle. But let's take a look at what we see when we have that candle over, if it will allow me to. Come on, baby. There we go. So by the time we get this candle, buyers are getting a ton of strength. So the buyers are above the 25. Momentum's not there yet.
Right.
So this candle right here, somewhere in this candle, it's a full body candle. I don't know exactly when, but you got to think this is 60 seconds.
Right.
Somewhere in this candle, I'm buying in.
Okay.
Odds are right here when it starts to break that. I'm buying in again, only going for my about 150, 200-ish pips, because this doesn't move as much as NAS and US 30. So I'm not going for my full 30. Odds are this is what I'll get out of it. That's it. Because this is a counter trend.
When you're looking at all this is a wick on the 5-minute. And when it gets that move out of it, you've got momentum coming from all the way down at the bottom of that. You can see that momentum starting to build.
On the 5-minute.
Well, I'm saying that on the 5-minute, that's a big rejection wick.
Okay.
If you shrink it up just a little bit. So we've got a zone sitting right in there. We push down through it, we reject, we pick up orders, and we're starting to move away. So this is going to be forming pretty quickly, and we get this big bullish follow through. You're seeing right there that we're really starting to move. We have a little bit of hesitation, and then it starts to take off. That's a really good clue.
Okay. The only reason why I keep asking, because I am so close. I'm like 1 or 2 candles off from being tripped up. Sometimes I also, okay, I get out and then I get back in. I just don't want to keep jumping in or losing just a small pips and then go the right direction. That's the only reason why I keep asking, but I'm getting it. The more and more you guys explain it, it's starting to come to me now.
Okay, so to piggyback off of what you said, I need to update the new trade manager on this broker real quick before I can show you, unfortunately. But when we dragged and dropped the trade manager settings the other day, I don't think there was enough examples that really showed what I was hoping you guys would see, which is if I get in on this candle versus I get in on this candle, those are very different trades, okay? This one obviously plays out. This one might. This one, you know, especially depending on your settings, like we only think of it of if I got in late, I didn't have room, right? We think of it, if I took the break, it only did like a spring and then it rejected. We're thinking about it on level 1. And level 1 is good in a lot of ways. Like, don't get me wrong, not overthinking it has a value. But understanding that you're either, the best takeaway is trust your analysis in the split second, especially if you're on the small time frame, or skip that trade altogether. So the takeaway from this conversation is either trust your analysis in that split second, or your job is to skip the trade altogether and wait for an entirely different trade. It doesn't mean, oh, well, wait, it did this or it did this or it did this, I'm going to follow this trade. It means I'm either in this trade because it lined up, or I'm looking for a different trade. This is done. I'm out. I'm not participating.
And also remember that, you know, whenever you're seeing green and purple candles here mixed up, both buyers and sellers are making money here. And you have to understand the market, that the system that you're trading is going to make money in. Because there are people making money on both sides of this market right there. There's algos trading this in fractions of seconds that are just trying to pick up fractions of a pip and just keep on doing it and keep on doing it. You know, but when you get expansions like that, you know, you have to be long or you're not making any money. Unless you're trading a higher time frame and you're looking at this, okay, this is moving up, and from here we're going to pull back, and we sure do. You know, there are lots of different ways of trading this. You need to understand what you are trading, decide what you are trading, and look for those signals. And if you want to trade something where you're going off of the arrows here, you have to understand the time frame and the parameters that that's running under, and know how to filter out, you know, what is really kind of a late signal. We're waiting for everything to be confirmed by a bunch of moving averages crossing up. And if we're just in tangled spaghetti land where all the moving averages are moving through each other, it's not the time to be trading that. You look for areas, you know, kind of like this, but on the higher time frame where we're fanned out, and then your signals are going to play out beautifully. But that means that you have to not take trades at times when you'd like to be in the market.
Okay.
So let me check the 5-minute time frame. I bet, let's see where it's retesting. So if this is a corrective wave, this could be done. If not, we've got another wave to push back up. We've got like that kind of that doji formation. We want the fast MACD to be up, right? For us to consider, okay, now we're ready to start buying. That's what we're looking to have happen, is for the fast MACD to be up, get that bullish candle and to say, okay, I can trust this for 30-ish pips or 20-ish pips or whatever pips, depending on the pair you're trading. Okay, that's what you're doing. So we're getting the doji now on this the bigger time frame, right?
Right.
But that's enough room though, Scott. This one right here. If we did go all the way back up, almost, it's not my 20. On this pair, I need 20. I need 20 worth of room for me to take the trade.
And it may retest that high. It's going to break one side or the other. It just is.
Let's see. Looking at the chat, I wanted to ask how to use the fast and slow MACD to optimize our trading. Also, when people talk about the MACD retesting, what does that mean? So when I talk about the fast MACD retesting, to answer that first, I mean the green is above, it came back down below the zero line, okay? Sometimes you're going to get stuff where it just touches kind of like this, okay? But that technically is retesting. Now, our neutral line isn't showing that in the same way, but that is retesting the zero line of the MACD. The zero line of the MACD. That's what it means. So the fast MACD retesting, come back up. So we'll get a fresh crossover of the fast MACD. That's the green MACD on this system. That's what it is. It's green. So, and then how do you use the fast or slow MACD to optimize your trading? Understanding how this is built and understanding what it does and how it does what it does is invaluable. Like it, that's kind of been my word choice, I think, of the last couple of weeks. But invaluable means like you can't put a value on it, right? I'm not saying that wrong, right? This is for somebody who wants to be an English major. Okay, so invaluable, which sounds backwards, but like it touches me in the right way to understand it, means, look, you can optimize this to where, let's go to the settings, like you're only getting signals based off of, whoopsie, they go off of the next higher time frame. You can do current, which is faster. You're going to get a lot more, so please know what you're doing. You can also only take entries that are in line with the 4 hour or the 1 hour or the 30-minute. You can take every entry that's in line with the day. You have so much you can do to optimize this indicator that there are no words to define and describe that. So just know that as you play with this, and there's nothing I can say or even Scott can say that's going to teach you more than what your hands-on experience will teach you. So play with it a little bit and get familiar with, okay, if I took this entry, would it work? If I took this entry, would it work? If I took it this way, would that work? And you'll get a really good feel for what's happening. So a couple of rules I can tell you is the arrow is waiting for all the conditions to be met. This is next higher time frame. Just for conversation, let's turn it to current. Let's see. It'll give us a little bit more clear entries. So like if you're taking this entry, keep in mind the arrow is not going to paint until the close of that candle. So it doesn't show up until here. One of the things that keeps me out of trades is when I get a signal and we don't make a lower low on this next signal, I don't take the trade. If we get a buy and I'm not getting a higher high on the next couple of candles, I'm not taking that trade. So it keeps me out of enough of them, not all of them, but enough. So it would keep me out of this one, right? Because I'm not getting the next couple of candles aren't really pushing down anymore for me to be worried about, catching this as a sell. Plus I'll see all these wicks and I'm not entering that. So go to this one. You don't get the signal till here. Your next candle is starting to push up. Do you have room to next structure? On this pair, I need to have about 200 pips of room. So personally, that's what I want to be on this pair. It's the slower of the indices. And so 200 is a little bit fluid. I could say maybe a little less than 200 because this is, again, slower than NAS and slower than US 30. But ultimately, 200 is kind of like my bare minimum. So this pair might go a little lower. Most pairs I don't. So we have enough room in theory from there for me to say, okay, I can take that and jump in. This trade works out. Single time frame entry. This is where it's kind of all happening. The fast MACD crosses and closes here. If my line will catch up. But it crosses and closes below the zero line here. Second bar is more confirmed. Your 3 is crossing below the 50 here, somewhere in around there. You get the arrow to maybe do what it's supposed to do. Would this one play out? Let's see. So your next couple of candles, I definitely have enough selling power, but I don't really start getting any push down until here, but we get this nice wick kind of retesting it. So if I was watching this, and this is in a 5-minute time frame, so if I was watching this, does this have enough room? If I'm only entering after we make a lower low from that candle, this one, I have enough room in terms of neck structure, and it moves enough for me to get my pips out of this pair. This one right here, current time frame. Next couple of candles, it's a bit rough. We've got all those wicks. I don't know that I would take it, plus because of the structure here. So we get it, measure. That one's not even 10. I mean, I will go a little less than 20 sometimes, but I'm not going to 10. So the odds are I would skip this trade. But even if I took this trade, when it did make a higher high, which is on this candle, I get just shy of 200 pips, so 20 pips, right? To kind of give you an idea how to optimize it. Knowing what you're doing is a big, big deal. So this is a 5-minute time frame. We get a signal here, 3 crosses the 50, fast MACD crosses below. This one has the added bonus of the slow MACD kind of in a favorable way, for at least my opinion. Next candle starts to push down. I'm only going for about 20-ish, 200-ish pips on this pair if I'm scalping. If I'm trying to swing, that's a little bit different if I'm trying to hold the move. But I'm only going for about 200-ish pips on this if I'm on these smaller time frames. So I get that. If I wanted to hold or keep moving my stop loss up, it goes a lot more, obviously, in this case. And in this case, I caught that move this morning. That's really how simple it is. This one's a bit tricky in terms of the buy. We shouldn't have an arrow here. Well, this isn't a 3 and 50 cross arrow. So this is not the original signal. This is not a arrow I would take.
That's probably a MACD cross at that point.
Yeah. So this one's a bit tricky, guys. And the reason why I say this one is tricky, oopsie, I'm sorry. Let me go back. Is because you see this engulfing candle. We know we had this impulse move to the downside. This is an engulfing candle, which means we're pretty confident, at least the way I see engulfing candles, I'm pretty confident that it has to retest it. So the odds are I'm not taking this trade until I get that retest. So I'm not going to take a buy on this signal. I'm not, because I need the retest, and it hasn't given me the retest just yet. Now, after all this time, we finally retested about 50% of this candle. So this is the whole candle. It's about 370-ish pips. This purple candle right here does retest that. So we finally got the retest of that big engulfing candle.
And let me bring this back to what I was saying before. Last purple candle before that move, we make the big move out, and the retest is right to the top of that purple candle, right there.
I like that thought process. I can see that. I can definitely see that. But just so you guys know, on these few signals that we just got, just this pair, 5-minute time frame, that's how I see all of these entries. So this one I won't take because of that. So this one, not enough room. Although this one would win, I would not have taken it. Just not enough room.
And folks, this is really good information. So bookmark this one. If you're struggling to understand this, watch it again and again. This video, that is.
I'll relabel it. Scott said bookmark this video. There you go. But just to kind of give you an idea of what I'm seeing and why I would take or why I would not take certain candles or certain arrows. This one right here is just a retest. I'm not taking that. And I can turn some of those off, but I keep them on because I like to take the ones that are more confirmed. So I like that re-entry only sometimes. I don't always take them. It has to match. This does not match. So even just based off of this, following a few certain rules, you won most of those trades. You skipped one or two, and I would have skipped one winning trade, but to kind of give you an idea. And now we wait. So I'm looking for a trade, guys. I just need it to give us a good trade. We're getting one on the 1-minute chart. I don't love kind of how it's setting up. We have room-ish, not even 20-ish pips to the next level of structure from where price is currently at. So not even. Does anybody have any questions on any of that thus far?
Yes, I do. Hi, guys. I'm just listening and trying to absorb all of it. Right. how do you use the ADX? I've seen how you use the slow and fast MACD. Now, looking at your entries, how do you incorporate the ADX into that?
Okay, the ADX is essentially, it's also a melody of moving averages.
ADX is a little bit different, but the MACD certainly is all moving averages based, but ADX is built a little bit differently.
Okay, so I know it's a calculation of moving out because I looked this one up. So look,
Okay.
you know this better than me, although I love MACDs. This one I looked up. I know it's a calculation of moving average divided by that equals momentum. This one I looked up. That's why I could be wrong, but I'm pretty sure this one I know. Okay. But either way, so how would you define it? And then I'll explain how I use it. So how would you define it, Scott?
You know what? I'm just going to go, before I say something that isn't true, I'm just looking it up quickly. I'm going to look at the formula and...
No, you're okay. Honestly, I trust your intellectual knowledge way more than mine.
I haven't actually looked at the calculations of this in quite some time. So I want to verify this. In fact, if you look up any particular indicator and find the Investopedia article on that, you get very good information.
That's what I used, was Investopedia.
And in fact, don't always listen to what they're saying on how to use it, but understand what it's doing by reading that article. Their use of indicators is sometimes a very common way of doing it. I mean, if you look at their articles on RSI, they talk about overbought, oversold. That's not the best way to use an RSI. But there's lots of good information on how to use it.
Okay, I would find the screenshots I took of that, but I'm gonna get out of this somehow. There we go. And I will oh, there we go. I know I have it. It's in my downloads. Okay, but here's how I use it. So how I use the ADX is pretty simple. Buyers, and this is set at 10. This is my setting. Dutch Spillers is slightly less. Another guy I work with is a multi-7-figure trader. His is slightly higher. I'm going to be super honest. Some of it's proprietary, some of it's not, but this is my setting. So they're different in a couple of ways than the standard setting, but let's be honest, it's not that different. It's not that special. It's just the one that I like best and the way I see it. So the green line, the way my colors work, is the positive DI, and the purple is the negative DI. The white is the momentum, so the power behind it, right? So what this is saying is one of the reasons why I stuck with using it is it works and functions very comparably to like a currency strength indicator. So you'll put this on your chart and put a currency strength indicator on your chart, and you'll notice, holy cow, they look pretty comparable. They look not the same, again, pending your settings, but they look very, very similar. So it was showing me who had control. So on the indice, that's not so valuable, but on, for example, oh, that's silly. There we go. For example, on a Forex pair, what this is telling me is GBP being the first pair, USD being the second pair. So when GBP is strong, that's our green line. So that means GBP is green and USD is purple, right? And I just noticed that that's how it works really well. So I really stuck with that, and I loved the way it worked. So to kind of show you how it works on a Forex pair, that's what you're saying, is that the first pair, okay, is your stronger pair, right? That's your green. Your second pair is your purple. So in this case, so first, that's how that works. How I use it is the white MACD, the white has to be above the 25. So the momentum behind buyers and sellers has to have some strength, is what that's saying. It has to have some power behind it. It can't just be, oh, the buyers are in control and everything is kind of sitting still, because the buyers could be in control here and it could just be sitting still. So you need the momentum line to be up, right? And when you get a crossover, for example, of the buyers and the sellers, and momentum is up, that in and of itself is its own signal, believe it or not. This can be used as literally a signal if you chose to trade that way. Now, granted, you should follow some other rules, and you should be looking at more than one thing, because you could easily get caught in stuff like this. But it's not a bad way to be. It's not a horrible signal in and of itself. So In this case, let's see, buyers are in control, momentum is up, it's super clear crossover, you're buying. This one works out. Okay, it works out decently well, right? It's not a whole bunch of pips, but this is GBP USD. So that's how many you're going to get. 10 pips out of that is not bad at all. But what I like to see is when the momentum actually comes down and retests. So when the momentum comes down, that means the white line. If we just take every sell or buy when the momentum is already this high, you might get stuck in some trades that are getting ready to turn around. But it is an unbounded indicator, meaning that this can go up and up and up forever in theory. It doesn't. It just means it can. So this doesn't have a limit. There's no like, this is going to stop at a certain level. I think it goes up to, it potentially could go up to a lot of levels. If I'm not mistaken, I could be wrong. And I'm sure Scott is doing his due diligence right now. And I'm going to find those screenshots too. So I will send them to you.
I've got the formula in front of me and I'm trying to understand it because this one's pretty complicated. There's one moving average involved that's mostly a moving average of what it is previously calculated. What it's looking for is changes in price from previous candles. And it's a multi-step process. It's actually being normalized by use of ATR.
So yeah, it's ATR based. Idle entry. Hold on. I don't see it in here, go figure. But I was looking for my screenshots on it to kind of explain the math behind it, because I even wrote out all the math on it, because this one is one I like. But ultimately, yes, I want the white line to come down and kind of retest. I like the crossover. Momentum is up. That is a valid signal. You get a crossover, momentum retests. That's a better signal. This is better. This is good. This is better. This is good. And it has a calculation behind it. I don't see it on my list of pictures. I've bad entries compared with Donna. Yeah, I've got all these other pictures, but not that one. Downloads. So no, I don't have it on, at least not on my VPS. So to show you a little bit better, but it is based on moving averages and ATR. That I do know. And it's just this fancy equation. So this whole chart is based off of moving averages. The whole thing. It's just slightly variant information, all using different moving averages. Well, we're looking like we might get that push up on German 30. Does that help you answer your question a little bit on ADX? Ben?
Yeah. That's made it good for me. I'm just trying to marry it with the other indicators that are on there. So when there is momentum, I'm trying to see when there is momentum on the ADX, what will the other indicators be looking like? Because it's sort of like a triple confirmation, is it? Or at least two. Is it, do we take 2 out of 3 or 3 out of 2?
You can make that decision. The thing to do is to go back in time and look at entries and see what would have kept you out and what would have made you not take good entries.
Ah, right.
You will come to your own opinions eventually.
Ideally, yeah. Ideally, come to your own understanding. So I like it because it keeps me out. So just to be super clear, I don't often look at it as a get in, which I should look at more as a get in, but I don't, to be super honest, is it keeps me out of these trades. See, the momentum is low. All of the buyers and sellers are really just stuck. So even without having to draw a box or to know, like, it really helps me say, hey, I don't have to take those trades. I don't have to take those trades. And then here we get this beautiful crossover that has some power. Something is coming. So by the time this happens, you trust it a little bit differently because you're coming out of this mess. You trust it differently. That's kind of how I use it, is it keeps me out of trades that aren't moving as well. And it'll help me find the ones that are getting ready to pop off a little bit better. It's not perfect like anything else. It's not a standalone anything. And yeah, you can take 2 or 3, but that's up to you. This one, again, is a perfect example. If it will let me go back a little further, the moving averages were a mess. This comes out perfectly, and it comes up and it gets big and you get this huge move. There we go. Stay still. You have, after consolidation, you have this big pump. And Scott actually built an indicator that would, depending on how you have it set, would make this literally look blank, which is kind of awesome. Again, I think he put the momentum line back on it, which is nice. But this would be.
You can turn the lines on altogether if you want to.
There you go.
The ADX histo, it's in the group.
It's pretty cool. It clarifies this. If your eyes see this better, it's very clarifying because this will look black. This will look totally blank. So when you get this, you know something's coming. This will look totally black. So when you get this, not a big move, but you also know a move is coming. That's kind of how it's built, which is awesome. You'll get this black. It'll be black here, depending on your settings. I don't know if this is going to show up there or not. I can't confirm because I don't use it, but it's going to be super black. And then you're going to get this pop and you're going to get this black and you'll get this pop and you'll see it in a way different way. If your eyes don't see this, that's a great idea to use that one. It's pretty crystal clear.
Right. Is this for all time frames or just?
Yeah. So right now I'm using that same concept. I'll go to GBP for this, but I'm using it on the daily time frame.
Okay.
So
right.
the same strategy on the daily time frame. That's what I'm using, is this exact strategy on the daily time frame.
Right. Okay.
I think I was up 3,000 pips in US in actual, sorry, 3,000 points. So it's 300 pips on the daily time frame with a handful of pairs in 2 days. I was up a lot of percent. I don't know how much percent, but just using this exact thing, kind of this, and I added the daily dots. That's all. Is this exact strategy, adding the daily dots. So it's not bad at all. It works, and it works pretty darn well. So.
Miss Jenny, I see a lot of people talking about the daily dots. Is that an old indicator or is it new?
My question exactly. What do they do?
Well, it's no longer available. If you joined after Pat switched out to the simplicity system, he's no longer putting those indicators out.
No, that's not true. If you only have access to that, the daily dot now, if you are in the signals group, and to keep your license active for that, you have to maintain your membership. So if you go to the website under the signals group, there is a tab the link where it says to download the daily dot indicator. And you have to put the whole thing in the library and all that good stuff. So go watch that and then send the information to the Simplicity email, and I'll issue the license.
Which tab? The signals group, and then where to look at it for that again?
It'll say daily dot indicator.
Okay, I'll look it up. Thank you.
You're welcome.
There you go. Guys, I'm still waiting. This hasn't given us the move yet, and this is why we don't jump in. No one wants to talk about this part of trading, but it's real.
That's all right. We are learning.
There you go. So we haven't gotten the move yet. Sorry, it's not happening.
I think you've been delayed so that I learn first.
Yeah, there you go. Small favors, huh?
Mm-hmm.
And it's a good thing we didn't jump in on that consolidation, because we did not make that higher high, and it stopped moving. So that's where we're at now. We've got another signal that's current. I'm pretty sure is what we have it set to. So again, let's talk about this signal we're getting. We've got 2 wicks to the upside. That is not attractive. So I'm going to drop another line. Okay. 2 wicks to the upside, not attractive, but let's analyze this in real time together and say, okay, do we like this? Do we not? The ADX, the buyers are in control. The momentum is starting to come up. I don't care as much about what the buyers are doing. The sellers are weakening. Right? So the selling power is weakening. I don't care if this bounces around up and down. I do care if this starts pointing up. If this starts pointing up, I know to start looking to exit. I know that I'm definitely not getting what I want, but I pay attention to the opposite of whatever I'm doing. So if I'm buying, I'm looking at the sellers. If I'm selling, I'm looking at the buyers, just to give you an idea of how I'm seeing this and how I was taught to see it personally. So now analyze this trade. Buyers are in control. That's awesome. We got an arrow. Slow MACD is up. And that I'm liking, right? Fast MACD is up, but it doesn't have a lot of oomph behind it. I don't love that. We're above the 50. We're kind of playing around. if we got in when we got that arrow, okay, you'd be in profit, but we did not get in when we got that arrow. So now that we're up here, we needed to break that area. We needed to break, and this is enough room of a zone to get our pips. This is not enough room. So I'll measure and tell you why. Taking an entry here, sorry guys, is just not enough room yet. To take an entry here, we've got not even 100 pips or 10 pips. But if we took an entry here, this is our 20 plus, 200 plus pips. We know we've got some room that it can play out. So that's how I'm seeing what I'm seeing. Totally up to you on how you want to do it, but that is what I'm doing. So that's what I'm waiting for. That's it. And I'm still waiting. Although NAS is pushing down, US 30 is pushing back up. They're all kind of going their own different ways now. Scott, you got an answer for that?
Got an answer for which?
I know. Okay. So it looked like, now I'm not big on correlation. You know that. I don't subscribe to that thought process, and I don't agree with the theory so much.
Why is German 30 different than SPX or all of the US indices?
Yeah, but so lately they really have been looking like they do the same thing, right? But then you get times like this where US 30 is going up, NAS is going down. Well, let's make sure they're all on the same time frame. And German 30 is, I'm looking like it's going to push up, but we're just kind of waiting on that confirmed entry. So,
well, they do have different stocks in them, which is why they are, there are different indices. They share some of the same stocks. I mean, almost everything that's in the US 30, which is the Dow, is present in the SPX.
And it's heavily weighted in there too.
Yeah, and heavily weighted. Not all the Dow stocks are in the NASDAQ, but some of the biggest stocks in the Dow are in the NASDAQ.
It looks so often like it's moving the same exact way, and then it doesn't, like in moments like this, right?
Well, the thing is that it works for larger correlations. If you look at it over a longer time, there's some of that movement that is the same. And part of that is just sort of a risk on, risk off mentality of traders. They're going to go into the stock market when they feel it's safe to put risk on the table. If they're wanting to get, if they're wanting to take risk off, they pull money out of the market. And, so you'll see some of this in concert correlation, but it also is, sorry, the blower dudes are going by outside. I hope you can't hear that too much. But you get some correlation that way. You get some correlation by stocks, but they will never be in lockstep.
Okay. Just asking. Well,
but we're looking at this right here. We have this wedge is still kind of in place. We've got this wedge coming up, and it's going to depend on what happens here.
It still definitely is in place. If we break above the wedge and we break above that line, I'm taking a buy. I'm only going for my 200-ish pips, maybe 150 on this pair. So I'm placing a pending order on that pair. So what about US 30? Okay.
Hey, Jenny, this is Robert.
Hi, Robert. How are you?
I see, and this is where the Elliott wave has me a little interested, because I see Elliott wave playing out on both German 30 and US 30, right? There are 5 movements upwards.
Okay, so here, we're on US 30 right now. I've got a pending order on German 30. If it gives it to us, we'll get our trade today. If not, sorry guys, can't control the market. But okay, so I'm on US 30. Pick a time frame and then you can draw on my screen. 15 minute, 5 minute, 1 minute.
5 minute.
Okay, 5 minute it is. Okay, do you know how to use the annotate feature?
I'm looking for it.
Okay.
If you see up where you are viewing Jenny Baker's screen, under View Options,
got it.
Annotate. Then you can choose your tools from the list of tools. So where it says draw, you can choose straight line, boxes, whatever you want.
Okay. Jenny, can you just expand that a little bit?
So go
Zoom in.
Yeah, there you go.
like that.
I'm sorry, out the other way.
One more.
And let me go over a little bit. There you go. Is that what you want to see?
Yeah, that's pretty good. So I'm gonna start at the bottom, right? So there's 1, there's 2, there's 3. Sorry, it's kind of crooked. Then there's 4. And then I see the 5 going up like that.
Okay. I see what you're saying. Scott, what do you think? Okay, here we go. I see. Okay, first off, I see that Elliott wave.
Yeah, it depends on whether it's a corrective wave. We've got this big move down.
Right. I can take off the fractals. Let me take that off to make it a little bit clearer. Delete. Okay.
So move out to a 15-minute, keeping the same zoom. Let's see what that looks like. So we've had a big move up. Let's assume that that big move up was one set of impulse waves moving up. So, you know, we could be correcting down, you know, up, another down, but we didn't really break lower here. We could still be breaking lower in order to make our impulse move up.
As a corrective wave.
Yep, a corrective wave. Because we've had a hell of a rise up to this point. If we go to the 1 hour, it'd probably be sufficient.
In a second. 1 hour it is. Can I zoom in a little bit? Or here, Control Y, take off my day breaks. There you go.
Yep, now here's the problem with Elliott wave. So this was our bottom down here. And no, actually it's not. We need to go even farther. So let's take 4 hour. See what that looks like.
And hey, Robert, no hard feelings. Like, cause I see the Elliott, I see the wave that you see. I see that, just so you know. I see the potential to the upside.
Yeah, and like I say, this is all fractal. So we were looking at the 5 minute. And it's hard to, what I'm saying is it's hard to put in context. You know, we've got, you know, maybe 1, 2, 3. Oh, who the hell knows? 4. I'm serious. You know, this is kind of the issue with Elliott wave sometimes. So now we're moving back down. So this is a corrective wave. 1, 2, 3 for a move up.
Jenny, does your indicator show the same levels, same points?
Okay, here, let's do this together. We're going to do it together. So I'm going to find it. I wonder if I'm logged in on this broker to log into my better one. Okay, so let's just, oh wait, you deleted your lines. That's cheating, Scott.
Well, sorry, everything was moving around, so.
It's okay, I'm just picking on.
I think I had.
So let's change the settings.
This.
Hold on real quick. Let me take off the little waves. We don't want the little ones on here. Let's just look at the 30s.
No chocolate for us.
No chocolate. Oh my gosh, I made these banana protein muffins like with chocolate chips in them and fresh bananas. They were so good, you guys. They were so yummy. I cooked all weekend. I made green chili too. Sorry, different topic.
So that's where I had my lines. Of course, now they kind of blend in a little bit, but you know, kind of you can kind of draw them in retrospect. At least that's me. I can kind of draw them in retrospect. I can make it fit the theory, but I can't draw them in real time. Sometimes it can inform your decisions about what might be happening, but you can be certainly wrong until you get plenty practiced at it. But from the name of this indicator, Jenny, it says ZZ something or another.
Zigzag and Elliott wave.
Yep. So
read that article yet?
This zigzag is what the old triple arrow was based on and what the daily dots are based on. It is a somewhat predictive algorithm based on, it's zigzag semafor. So what they're looking for there's some big zigzags, that's your 3s, some slightly smaller zigzags, that's your 2. It's like having your daily dots versus 4 hour and 1 hour, something like that. I think that's more what this is.
I don't know. If I can get in. Oh, it won't work in here. Huh. I don't know if I have it on here. Let me see if I can show you guys the other one. I can't give it to you, but I can show it to you provided I can find it. I'll look. And then if nothing else, I'll send you a screenshot. But we can't put those indicators in actual files because, it's a mess.
And Robert, I'm not trying to shut you down here at all.
He picks on me all the time. I just want that on the record.
Oh, I don't feel that way at all.
What I'm trying to do here is show that there is always multiple sides to the way you look at this. And you may get good at this, but that wasn't me. I looked at it, I swam in it a little bit, and I found that those were not waters that I was happy with. And you may decide differently. You might be able to come in and analyze this and say, this is what I see happening, and you can watch it play out. I'm not trying to dissuade you from going down that hole because I know that a lot of people do this really, really well.
And then you can be our Elliott wave expert, like honestly. So I'm hoping that some of you guys get so good at certain things that as a team, we see this in the best way. So the groups that did the 7 figures live kind of stuff, that's how they did it, guys, was they did the whole, one person was an Elliott wave master. They looked for 1 trade a week. Some people did 1 trade a day, and they'd all get on there. And then between them, they all had to agree on the trade. It wasn't just one person calling it. It was, okay, I see it or I don't see it, small time frame. And then they took their cumulative knowledge and they were able to help a lot of people, most of them hit 6 figures. Only a handful.
German 30 is breaking down out of the wedge.
German 30 is breaking down. US 30 is drop. Hold on, let's close this.
Yeah, US 30 is dropping too.
Let's see. NAS broke below. So our next target, we're already at that line. We drew that line last time. So taking entry on NAS is a bit late. German 30 has room. So if we're breaking below that, we don't have an entry right there, but I bet you we do on
We
this.
could still wick at this point from horizontal support and resistance.
From here?
We could still end up pulling back up in, or from where you have that purple line. Yeah, you're on the 1 minute.
Yeah,
There you can see, pull it to the 5 minute. You can see even more support. It's all the way across here. Yeah.
But that's a perfect double top. I would take this for a sell. So like the way I see it again, so it's meant to be variant. So I'm hoping we're not confusing too many people, but I would take this for a sell, knowing we could pull back. Okay. So let's just be fair, but measured move, you're looking for 300 pips, which would be in and around this level.
Yeah.
So I'm in. We never touched my pending buy, so I'm in for the sell. And that means I might win, lose, or draw, and that's fine. I'm okay with that.
And we do have an area right here.
Which arrow?
What's that?
Which arrow? We have an arrow right where?
I said area.
Oh, I don't know, but which arrow were you pointing to? Because I just looked up because I was looking at my other screen.
Right there. We got that nice big wick action.
Well, then protect it once you're up some, and there you go. Oh, man, US 30. This is why I trade US 30 on the 1 minute, you guys. That's up 800 pips. 800 pips from where price. So here, I if you guys are ready to play with US 30, I'll go to back. We were looking at it on the Elliott wave and discussing possible theories, right? So let's go back here. So ignoring the arrows, because this is set to next higher time frame, following the strategy, price crosses above the 50 here, give or take. That's not a lot of move. That's not a lot of a move. That's not even 200 pips, but you have room to protect it. Okay, now granted, when we're looking for the break, we want the retest. So we know we're not looking at this sell, but if you did take this sell, okay, not quite 200 pips, and I'm under measuring. I want that, on the record there, just to pick on you guys a little bit. So this one, 200-ish pips, and I'm under measuring just to show you what's possible, just following the basic strategy. This one under measuring, 300 pips to show you how I see this. This one even, and this one will count that as a loss because of where it happened and how it happened. And that's without even super hyper analyzing the information like, okay, did the next candle make a higher high? What is the ADX doing? Without hyper analyzing even this, it works, and it works stinking beautifully. And actually,
let me show you a little trick, Jenny. If you take your, where's the tool? Your trend line tool right up there. And then just draw a little line up here someplace. It doesn't matter where, just out of the way. Now shorter, much shorter. Let's make it vertical. And look at your pip. Okay, as you are pulling it down, drag that down. Yeah, that's fine. Then grab hold of that top handle, the one that's circled there, and pull it. No, go down straight. Keep it vertical. And what you want to try and do is make that about 3,000.
it's 29, close.
Now you have a $30 measuring stick. Okay, so you grab hold of a measuring stick and put it wherever you want and see, did I make my target or not?
Did you hit your target?
Yeah.
Oh, look at that. See, perfect. Kind of give an idea. When you actually follow the rules, and remember, you'd want your stop loss above or below structure if you're just following basic rules. You win 99% of these trades. US 30 moves fast. And like, if you're looking at that spreadsheet to compound and you want to have a challenge and say, hey, I have $200 and I feel like blowing it. If I do good, then, I'm going to withdraw at 5,000, I'm going to withdraw at 2,000. I'm going to withdraw $1,000 at 2,000. And then I'm just going to blow it. I'm going to keep going until I win, lose, or fail, win, lose, or draw kind of mentality. You can do that with US 30 in a week and just take every entry during your trading hours. It's kind of awesome. Let me get my little special stick back, kind of get an idea and see. It's pretty awesome. This one, not so much. This one only went 20. That's where it crossed, somewhere in around there. This one doesn't do that. These all went 20, give or take. This one would have won, but it would have popped you back in and out, depending on if you were following the ADX. But just to kind of give you an idea, now that we have our nice little cool line, that is something I've been doing when I'm scalping. Otherwise, I'm just using the 15-minute time frame for alerts. That's it. So I'm not on my computer all the time. So overall analysis for US 30 is a buy. Simplicity. Let's see. Simplicity, to answer the couple of questions in the chat, the simplicity is kind of like that indicator we just saw. So when I can pull up the other Elliott wave thing, Scott, I'll show you what I'm talking about. The zigzag is so close to the Elliott wave, it's not even funny. Like it's like almost the same thing. Now we're not supposed to say that, but it kind of is. So I'll show you guys that. So getting over that topic, the analysis overall on US 30, we can talk about it, but overall it has potential. So we're trading this on a pretty small time frame, in all fairness. So I don't know what the simplicity is saying, but I can take a look. US 30, the overall analysis is it has room to go either way. So right now we popped down and all we did was kind of reject off of that zone. We didn't stay down, but we do have this kind of double top forming here. And this looks like that flag, that pullback, this impulse move to the downside, this pullback we could easily get the continuation of the downside, and we can also reject hard to the upside. So our job isn't to like have some super long-term analysis on this pair. This pair is, even on the 5-minute chart, just to give you an idea of how big this wave is, this is thousands of pips. This is 1,500 pips. So I don't have a huge analysis of what this is going to do for a long, long period of time. I can just say that right now we broke below the trend line. We're pushing up currently. That was an impulse move to the downside. If we failed to break this trend line, we'd be looking for another sell. That's what we would be doing. But this impulse is allowed to be corrected without changing the selling bias. So overall analysis for US 30, we got room. I don't know. We could easily push either direction. So go to a small time frame and wait for a signal. It's not rocket science, something that I know better than you. I'm doing the same things I'm telling you guys. It's just that I see it a little bit more with more knowledge. So when I see,
we've got this rejection wick from before, and as it comes down into that, you can almost count on that making some reaction to that location, because there were buyers that got left out in here. And because price moved away quickly, you can count on some reaction. It might not be all the way up to the top. It might not be even, super far, but you can make something out of a rejection of a wick like that if you are nimble.
There you go. So, and then Stephen, yes, this is very different than the simplicity system. So the simplicity system is a reversal based system. So what time frame are you telling me that it's a sell on, Abby? If you're telling me it's a sell on what time frame? Please. Well, either way, even if you don't text back an answer, I'm guessing on some time frames it's a sell and on some time frames it's a buy, and that's probably okay across the board. Like, let's see. I don't think I have simplicity up on this. Oh, I do. This is simplicity. So let's take a look together. US 30. What time frame were you looking at? Gonna have to tell me. 5-minute time frame is saying, and it also depends on your settings too. So let's just be super fair. Indicators. Let's go see the settings on this. Input. This is currently set to 15. So on a smaller time frame, you want a bigger number. On a bigger time frame, you can use a smaller number. That's basically how fast you're going to get in. It's also how many times it's going to repaint or not repaint, but adjust. Be wrong. Well, I'll stick with that one. So you definitely want a bigger number if you're on a smaller time frame. 4 hours, the trend. I'm gonna hit OK, hit close. So on the 5-minute time frame, that's saying it's a sell. It didn't pop up until now. So now it's retesting. Could we get the continuation? Yeah, but you'd have to tell me what time frame you're looking at and what your settings are. And yes, this is a very different strategy than simplicity.
Is that pointing to the current candle, Jenny?
That's a huge arrow. Let's find out.
Yes. So it's on a live candle.
On a live candle.
That's interesting.
It's predictive. It can do that. It can show up on a live candle. So.
Am I seeing this right? Is that like a huge wick from the top and the bottom?
Here.
On that current candle, or? Oh, okay, it was just the crosshairs. Sorry.
Yeah.
So there. But yeah, this is different than simplicity, guys. This is its own strategy. It's a standalone kind of, and it works. It works on lots of time frames. It works, fairly well. You have to learn some basics. Like once you get a signal, you have to know, okay, I'm not taking it. The next candles aren't moving in that direction. You have to know, okay, I need some volume. You definitely want to know what's happening with the MACD, or at least some basic structure. But other than that, like you'd be surprised how often and how easily it just works. Scalping on, like, for example, the 1-minute US 30 is go get your couple of trades and be done for the day. It's kind of awesome. I mean, it's really awesome. So And if price moves up, then the area.
All right, Jenny, you said you use the 15-minute for alerts. How do you do that?
I use TradingView still because it's clean and it's not with all my other apps. In fact, I just now got one on US 30 and US 30. So to give you an idea, my TradingView alerts are set up to where when the price, you have to have a pro membership to have more than 3 alerts, I think. Don't quote me, I could be wrong. I think you're allowed to have up to 3 alerts if you don't have a pro membership. So not a bad way to be, but basically when the 3 or the 8 crosses the 50, you're going to get an alert saying, hey, this is happening. So I just got an alert. Granted, mine are set to the 8 and the 50. That's the 8. That gold line is the 8. This is the 50. So I don't have mine set to the 3 because I want to avoid some of the noise. And if I'm in front of my computer, I'm going to catch that anyways. So that's how mine is personally set up, to catch kind of the bigger part of the move. But you can also have this right here send you alerts too. So this will give you an alert like every time it'll go to your phone, and then you can only have a handful of pairs up, ignore every single thing else, and go on with your day.
Sounds cool.
All right, guys. Well, this is kind of playing around. I am going to hold my German 30 trade. So I'm going to hold my German 30 trade until I'm given a reason not to. So bottom line, that's how I'm going to do it. Totally up to you what you guys want to do. Let's see. I'm marginally in profit, just barely. But for right now, I still think this has enough room. Granted, we hit structure. It doesn't mean we're not allowed to play around before it goes. So here's the deal. This is a winning trade if it doesn't break this high, okay? If it doesn't break this high anywhere in this area, and think of not a straight line, but think of the area itself, then I'm still counting this as a sell. So at some point we have to get over all of our many analyses and many thought processes and feelings and say, I'm going to trust this trade, I'm going to walk away, or I'm going to freak out and just wonder what it's doing every 2.5 seconds, or hey, maybe it recrossed the 50, and it might. So you guys can decide that if you want to get out if it recrosses the 50, but for me, I'm going to stay in the trade, period. There is one thing, I think it might be on this chart. So let me make it big. If, for example, I were to get like my little orange arrow as a buy on the 5-minute time frame, when I consider maybe exiting, yeah, I might, but otherwise I'm staying in that trade. So I don't have it on this. I'm going to stay in there.
Hey, Scott, I have a ATM question for you. Okay. Earlier, while I was at work, I kept getting an error, and I just took it off the chart and it stopped. It says, I think it was multiple instances of ATM are trying to manage the same chart.
I saw you posting that. What that would mean is that you've got more than one copy of ATM running.
Okay.
And they're trying to manage the same currency pair.
Huh.
So you might have one that's set to manage all trades.
Okay.
And then another one that is either set to all trades or to any other. Because if you have one instance that's managing all trades, then it can't have anything else trying to manage.
Okay.
So you have a conflict somewhere.
Okay, I think that's what it was, because what I did is I had one managing the current symbol, and I think the other one says manage all trades, and I believe it stopped.
Right, that'll do it.
But I can use different brokers, right? That shouldn't affect that. I shouldn't get that.
Brokers is no problem.
Okay, all right. Thank you.
Scott, I also had an ATM question.
Okay.
I've got 2 lines on my chart. One of them is ATM set OP line, and one is ATM set something else line. But what I've noticed is, SL line. But what I've noticed is that they seem to be stuck there. I've opened ATM, closed ATM, taken it off, taken it on, restarted my computer. And on one particular chart, I don't know if it's an error or not, but on one particular chart, even when ATM isn't running and it's not been set up at all, it's just always there. So do you want me to send you screenshots of that, or?
Let's see here. Is this something that just recently occurred, or was it before?
I sort of noticed it last week, and it's because on one of my charts I have a symbol changer. So I would go through different currencies, never had a problem, and it just so happened that I stopped on New Zealand Swiss because I said, well, wait a minute, that's not my opening and stop loss line. And I zoomed in, and they had ATM set and on both of them as a label. So it's been since maybe last week, I think.
Yep. So
Close the chart.
the previous version, we're on 24 now, I believe. And so 23 had a bug in it. And it was one of the bugs that I fixed.
Gotcha. Okay. So I just need to re-download the new one.
Yeah, if you bring up ATM and then close it again, it should clean up after itself. Otherwise, you can just list all of your objects. So you can hit a Control B on your keyboard. That will bring up your objects. And then if you do a list all, it will show everything. So that's a button on the right. And then highlight everything and delete it. And the ones that are being drawn by other indicators will all get repainted.
Okay. Yeah, I've always been scared to do that for that reason. So it's good to know that it will repaint for the other ones.
Yeah, and if they don't repaint right away, just change timeframes, change back, everything will repaint.
Okay, good. Thank you.
You're welcome.
And Scott, one other question about the ATM. We were having a conversation earlier about the gaps. What happens to a trade that's being managed by ATM during a gap?
Ooh, good question.
Yep, it will deal with whatever prices are coming up. And if you are managing using moving averages and stuff like that, your moving averages will be skewed by the gap. And there's just no helping that. So whatever your rules are, it's going to interpret the data that's there, and that's going to be it.
I'm up 120 pips, so 12 pips-ish on German 30. So you guys know.
Thanks, Scott.
You're welcome.
All right, does anybody, we got our one trade. It's kind of hit and miss talking and trading, but we got our one trade in. Does anybody have any questions, comments, or things of that nature? Gosh, we talk forever, you guys. It's been 2.5 hours.
You got the gift of gab.
The other day, last week.
We went 3 hours. Donna goes, how long was that call?
It was over 3 hours.
I know, right?
Can I ask one more question?
Yeah, of course. Come on out. We just hang out anyways.
So Scott, I wanted to sort of clarify, because you said this earlier. So with SPX, so I am tentative with it right now because I'm experimenting, but you said that with it, it would be more reasonable to do a larger lot size for less amount of pips, because that makes sense. That's how it moves. So I was also curious what you would say in terms of time frames, because that's another thing I was playing with, trying to get a feel for it. And I liked, I guess, the development on the 1 minute, but when you were going over the charts, you displayed it on the 15-minute compared to the US 30. So I'm just curious which one you think.
It doesn't matter. It really doesn't matter. So if you're seeing really wicky price action on a particular time frame, changing time frames can smooth things up.
Right.
So make your decisions based on what you see well. You know, the time frame that you trade on, part of it is going to depend on the times that you trade and how much time you're putting into it. You know, trading the 15-minute chart, if you're not doing a trade manager, you know, means that you're going to spend quite a bit of time hunting your trade. And once you put it on, then you have to monitor it every 15 minutes. You know, if you're trading on the 1 minute chart, you are looking for your trade for less time, and then you're monitoring it for less time. You know, so part of it is a lifestyle choice.
Right.
But, you know, mostly what you want to do is if you look at your time frame, you find price action that you can read. If it's
makes sense,
you can't read it, then change time frames or find a different pair.
Very true. Very true. Okay. Just testing out stuff that we're learning in class. Always very
One
helpful.
more thing about SPX on the 1 minute is just that sometimes the spread can seem too large for the price action that you're getting. So pay attention
Yeah.
to what your spread size is. You know, right
Oh,
now,
yeah.
SPX on the 1 minute is not looking bad. It's about a 9 pip spread, and the candle size is close to 20.
Yeah, you mentioned something like that last week, and that was a good lightning bolt because it sort of helped something click where I'm like, okay, why is this spread so big? But yeah, I realized that last week when you mentioned it.
Well, you know, the spread sometimes is going to be pretty close to the same all the time. But if we go back to the left, Jenny, when you get into areas like this, when price is moving very little, that spread seems huge.
Yeah, definitely. And then, of course, right next to it is when it takes off. So there is the struggle.
Pay attention to time of day. That's the U.S. Open.
Ah, okay. And that usually sets it off pretty good. That's true.
Right.
Just so you guys know, I don't usually trade like even German 30 so much on the 1 minute because it's US 30 on the 1 minute is super fast, but even German 30 is a little bit minute for my taste.
And, you know, one of the things about trading indices is that, you know, you've got to be swinging a pretty big account in order to afford to trade on higher time frames. That's less true with SPX.
Yeah, definitely. You can, well, I don't know what the minimum would be, but I feel like you could do decent with like a $50 account as long as you follow rules and are careful.
I would think so.
There's hope for us yet.
Okay, guys, does anybody else have any questions, comments, all that other good jazz? I'm up 700 pips. Donna's like, no more.
Stop asking. Does anybody have any other questions?
I'll save mine till Thursday.
What is it?
I'll save my question till Thursday.
Well, do you have it written down so you don't forget it, or do you want me to answer?
It's super easy. I remember.
Okay, gotcha.
One thing just I want to mention, I did a bunch of videos over the weekend and I posted playlists into the group. They get buried in the Telegram traffic. So, you know, if you're not aware of that, go back and look at it. This is all stuff on ATM. So a lot of instructions on, you know, how things work. So,
Donna, can you by chance maybe add Scott's ATM videos to the pin post? Can you do that pretty please?
Is the pinned or the Google Docs?
Google Docs.
Yes, I'll make a section for that. Yeah.
All right, awesome. That'll work. So
and those are unlisted for right now. So your playlist is your access to get into the groups of videos. There's going to be another set coming up on using the expert advisor more directly, but I'm going to wait on that right now. I'm busy trying to write the license server.
Okay, gotcha.
And I hope this doesn't run afoul of the promotion of stuff from outside the group. So.
No, you're fine. I just have to be careful. Like, that's all. I have to be careful. I gave my word to Pat, and in exchange, he gets to run the company. I get to work with all these amazing people, and you get to promote your ATM. I just have to be careful. That's all. Like,
okay, well, we'll have a conversation this afternoon.
Yeah, no, you're good. All right. Well, that's it for today, guys. We tend to talk for a long time, but the good news is if you actually listen to these and you're listening now, there's a ton of information buried in between all of it. And hopefully that environment is an environment where you guys can learn and take away some of the pieces and parts and grow from it. But otherwise, I will talk to you.
On that, it's just that what I said before, that this was really good information and bookmark this. I really do mean that, because Jenny will drop these little things now and then about what keeps her out of trades. But when she went back and talked about that whole thing, that's not something that you get really often in these classes. So that's worth watching again.
Yay, thank you.
Yes, I agree.
All right, awesome, guys. I hope you guys have an amazing day, and I will talk to you guys on Thursday. Take care, and God bless.
Thanks so much.
Thank you,
Okay,
Jenny.
Thanks, Scott. Bye.
Thank you, everyone. Thanks, Donna.
Thank you.